Good afternoon, and welcome to the 2021 OpCon, sponsored or put on by New York Nonprofit Media. I'm Zach Williams, Senior State Politics Reporter at sister publication City and State, and a former staff reporter at NYN. Welcome to the event once more. We got a great lineup of nonprofit leaders, some of the people that know more than anybody else in the business on how to really manage the operations of a nonprofit, foundation, or any other organization. But before we get into our wonderful panel discussions, I would love to just thank our events team and our great sponsors for helping us put on this event today. Our sponsors include Acuda Digital, BHI, the Bonadio Group, Buckbinder Tunic and Company, Citrin Cooperman, Lamb Insurance Services, Inchung LLP, Roberta Katz Consulting, Your Part-Time Controller LLC, and REW CPA. Thanks again for helping us put on this great event. In lieu of audience applause, I'll just give a little clap here right from my apartment. We have three great panel discussions slated for today over the next couple hours. And hopefully there will be opportunities for audience questions, although that will be moderated by the panelists themselves. But if you do have a question that you want to get into the mix, just drop it into the Q&A in the chat feature, which should be at the bottom of your screen. And one other thing is, for any of you watching today, you're automatically enrolled in a raffle, which will have a very special prize to be announced after the event is over. So just stay tuned, make sure you're in the running. I swear it will be worth the time if past is any precedence. Now, let's jump right into our first panel discussion, which will focus on what nonprofits need to know about accounting and finance. And moderating this discussion is Michelle Yanche, Executive Director at Good Shepherd Services. Michelle?
Hello, thank you, Zach. And thanks for everyone joining us today and for the panel that I'm going to be moderating. We have, a really tremendous expertise on the panel, which you're going to hear all about. So I'm going to start just by introducing myself, and then we'll give the panelists an opportunity to introduce themselves as well. I'm Michelle Yanche, Executive Director of Good Shepherd Services. And while I have been had a long career in public service, I myself am not a finance professional. And I imagine that many of you who are in our audience aren't either. And so this is really an opportunity for folks who are in leadership roles related to nonprofit organizations or on the boards of directors or others in the field, to get a sense of what do we need to know to be responsive and be able to fulfill our roles leading in the nonprofit sector without being finance professionals. And maybe some of you out there are finance professionals, and we're eager to have you be part of our conversation today. So I'm moderating this panel. I'm going to now invite each one of our panelists. I'll just call on them one at a time to tell us who they are and to give us a brief snippet of the expertise that they bring to this conversation today, so you can get a sense of who's in the room and who's going to be presenting to you. So Ellie, I'm going to go right as the way that you all appear on my screen. Ellie, introduce yourself to us.
Thank you, Michelle. Hi, everybody. I'm Ellie Hume. I am a director with Your Part-Time Controller, and I'm the market leader for our New York City area practice. We are an outsourced accounting firm specializing in helping nonprofits with everything from bookkeeping to CFO level services on a part-time basis, hence the part-time in our name. We do all kinds of things like filling in and interim roles, as well as providing that controller and CFO level person on an ongoing basis, but at a limited schedule, like once a week or once a month. And we really tailor our services to each client that we work with. My background, I'm an accountant through and through, always wanted to be one, became one, and have done it forever. But it has been a true passion of mine to serve the nonprofit community. And I started in government and switched over to nonprofit many years ago. And it's been a pleasure to educate and participate in these conversations and help nonprofits better understand financial management. So I'm excited to be on the panel. Thank you, Michelle.
Thanks, Ellie. John, you're up next.
Michelle, hi everyone. Hope everyone's doing well. Pleasure to be here with the panel and with all of you today. My name is John Eusanio. I'm a partner at Citrin Cooperman's New York City office and also their national practice leader across all our offices across the United States. At Citrin Cooperman, we help a host of nonprofits ranging from all types and sizes, all shapes and sorts, deal with their compliance matters, whether it be from an audit perspective, whether it be from tax perspective, taxation perspective, or advisory needs that they may encounter, such as cyber, technology, and risk management. I've been doing this well over 20 some odd years. Time does fly, it seems like yesterday. But I've always specialized with nonprofits, working with boards, working with management, implementing new issues, new accounting literature, new matters that arise, whether it be for single audit or with various standard setters. My hope today is to share some experiences along with the rest of my panelists here about best practices that are occurring within the industry. Also dealing with some of the new federal funding streams that have come into play and how that might impact your organization from a compliance reporting standpoint. And then just to touch on somewhat the internal controls and risk management considerations that management should encounter. So it's a pleasure being with everyone and I look forward to our discussion.
Thanks, John. Karin, tell us who you are.
Hi, my name is Karin Kunstler Goldman, and I'm the Deputy Bureau Chief of the Charities Bureau in the office of Tish James, our extraordinary Attorney General. I've been doing that for a short time. I'm just in my 40th year. And the Attorney General is the Chief Enforcement Officer of many, many laws, including those that apply to nonprofit organizations and charities. And we do a lot of enforcement. But what we consider one of our primary roles is outreach and education to the sector. We feel that if we can get compliance through what we call the soft touch, reaching out to organizations, they're in better shape, and our nonprofit sector, which is such a major part of our society, can function properly. So today I'm going to talk about a little bit about what some other organizations have done wrong, so that you out there can learn from that and do things right.
Thanks, Karin. Now I'm going to ask Jeremy, my fellow nonprofit CEO, to introduce himself.
Thanks, Michelle. Hi, everyone. Good afternoon. It's great to be here. I am the president and CEO of the Children's Village and the president of Harlem Dowling, two organizations founded in the 19th century, so 1830 and 1851. I am the ninth president and CEO. I've been in this role for 17 years, which means that I get to take credit for a few of the successes, and I own all the problems that we have today. So they're all mine, no one to blame. We work in juvenile justice, foster care, immigration, and community development, and we have one focus. We want to make sure that children grow up with people that love them. So this concept of love and belonging, and not more government and more charity. We think the system that charity and government, including being at Children's Village, is not a solution for children, that they need to be with people that love them.
Thank you, Jeremy. And as you mentioned, despite our best efforts, things do go wrong, and we do end up having to worry about risk and deal with challenges. And that's why our partners in the insurance industry are very near and dear. So Josh, you can finish off the introductions by telling us about who you are and what you bring to the conversation.
Thank you, Michelle. So I'm Josh Lamberg. I'm the CEO and founder of Lamb Insurance Services. We're the nation's largest insurance broker that handles nonprofit and social service organizations exclusively. So we just do property and casualty and only for nonprofits. We've got 1,500 clients across the US. Somewhere between 400 and 500 of them are right here in the greater New York City area. We're at a moment in time where the insurance industry is very volatile. We've got a dramatic recession in capacity from insurers and a highly litigious environment. So costs right now across the industry are going up dramatically. So I'm hoping to share with you some of my perspective, some opportunities there may be for you as an organization to help manage that cost. As we've seen, especially with some of the larger organizations, it's a significant varying expense on their P&L, Ellie. So looking forward to sharing with everybody today. Michelle, thank you for that introduction. I look forward to our discussion.
Great. So we're going to go through a couple of topics that we lined up. We thought that you'd want to hear about, but we're going to do our very best to have time at the end for Q&A so that we can respond to the questions that are on your mind. So as we go through the conversation, just jot down if you have some questions that you want to ask us. We'll make sure that we are on point and succinct enough to make sure that there's time for you to ask your questions to this incredible panel. So accounting and finance isn't always a topic that's described as really fun, but we're going to try to do it, except by Ellie. We're going to try to do our best to make this panel really as fun and interesting for you all as we can. And so on that note, we decided that we would have Karin open up and give us the top 10 mistakes list, sort of a la Saturday Night Live or The Night Show. Give us the top 10, Karin. Oh, you're muted. It would not be a Zoom meeting without having to remind someone to unmute.
Yeah, I don't have that t-shirt, or you guys don't have the t-shirt that says you're muted, which I've seen many times. So yeah, we decided that we would start with this list, not to, paint the sector with a bad brush, but to give you a sense of mistakes that others have made and what we look out for. Our bureau has 6 accountants, and they go through many, many, many financial reports of charities, and they came up with what they feel are the top 10 issues. And way on the top is missing or incomplete filings, such as missing schedules, missing information on Schedule O, which is really an opportunity in many instances to sing your praises. And Schedule B, missing information about the organization's other assets and liabilities. That's a big one. Listing other or miscellaneous expenses without any explanation or details. And there are organizations that put hundreds of thousands of dollars into those categories, and we have no idea what they are. Missing an audit or reviewed report by a CPA. Now, organizations with over $750,000 in revenue have to file an audit, and those with between 250 and 750 have to file a review report. Starting with July 1st, 2021, organization, the threshold will go up to $1 million. But sometimes we get reports that just don't have those audits or review reports with them. And I have to tell you, I'm going to stop in between 3 and 4 to tell you that many of these problems are going to go away when we have mandatory e-filing. E-filing is available now, but it's of a small percentage of our filers use it. And one of the goals of e-filing is to get rid of some of these problems. So another one that comes up with some frequency is failure to report any fundraising expenses when we're aware that the organization is fundraising, and failure to report payments to fundraising professionals when on our Form 500, they've listed ABC fundraising professionals. So they've listed a fundraiser and then it doesn't make it to the 990. Here's another one that's very, very helpful to organizations, and many organizations just don't make use of it, and that's the description of programs. It's another way that you can tell people looking at your 990 what you're doing and what part of your organization is conducting those activities. And people look at that. Missing signatures, that delays posting of the financial reports. Of the perfectly good financial report comes in without the certification, no signatures. Adjusting prior year figures without any explanation of where did that adjustment come from. Missing schedule of grant recipients, a frequent error. And the reconciliation to the audit is not accurate or is incomplete. And this is one of the first things that we look at. It's number 10, but it's the prior year figures on the current filing don't equal the year-end figures on the file for last year. That's a real signal that something's gone wrong. So, and we go around, well, we used to go around the state giving this kind of advice to get people in compliance. And we hope that you'll take this to heart, and when you for your next filing or your client's next filing, make sure that you don't get on this list. And thank you all for being here. Public education for the sector is crucial. We don't want you and your clients wasting time with litigation when you can comply with these requirements just by listening to not just to me, but to your other advisors, your accountants and your attorneys. So thank you.
Thanks, Karen. I know that I love being in these panel conversations as a participant or as a panel member, and hearing something that gives me that aha moment. And I definitely, one of my big takeaways from this is going to be related to looking at how we're describing ourselves on our 990. I have to honestly say I never gave any consideration to that. We spend a lot of time on our annual report, on our website, and our sort of glossy fundraising materials, but our 990s is something that our donors are looking at. And I think that probably the description of our programs on our 990s was written by our finance department, which probably isn't the team you want writing, communicating directly with donors about the organization. So that's at the top of my to-do list now. So hopefully everyone is going to be taking away some things to check on when we get back to the office, either the virtual one or the literal one. So also, I think from many conversations with you, Karen, one of the things I always remember you saying is really, it's not an expectation that things won't go wrong, right? Our expectation has to be that things will go wrong. And the issue really is always like how we're going to handle them. And Karen, I know, is a good person to have in your electronic Rolodex to reach out to when things do go wrong. But on that, Josh and Ellie are going to share with us some red flags to watch out for. How can we be scanning our organizational environment for those things that are likely to go wrong, might be an indicator that something's going wrong, so that we can respond in the sort of quickest, most efficient fashion.
Josh, can you go first?
I'm more than happy. I'm more than happy to let you take your first shot.
All right, sounds good. Well, thank you. I don't want to go too far negative with the mistakes and the red flags, but, there are certain things that I would like to mention, just thinking about an organization at a high level, always having what we like to call a healthy skepticism, and making sure that you're asking questions and not just taking the financial statements at face value and thinking that everything's under control. Michelle, you admittedly said, you're not a financial professional. You hire really great people for that. But that doesn't necessarily excuse any executive director or management team member or board member from really getting educated about how to read the financials so that you can ask the right questions. There's always this in the subway, if you see something, say something, it's okay to ask those questions and to speak up, and don't be afraid that your question is not gonna, it's gonna be a silly question, or I'm the only one that doesn't know this, so I'm not gonna say anything in the room. But in terms of some red flags that I see in terms of financial issues, are you even getting regular financial reports? We too often have come into organizations where they might be getting a quarterly report, or they might be getting only an annual report, or they're waiting for the auditors to prepare the final financials in order to understand what really happened for the year. And those things are happening so far late in the day to know how to change course and fix anything. So making sure that you are getting regular financial reports that give you a basis to compare. It's not just what happened last month, but okay, well, what happened last month compared to the budget? Did we think that would happen? Why didn't our plan work out from the budget? Or how does it compare to last year? Are we really different from last year? I know a lot of people looking at 2020 and 2021, comparing it to 2019, it's so different. And a lot of those things can be easily explained, but you want to be able to see those trends and analyze that information and understand what is creating the variances in the organization and the way that the finances are being run. I know there's a lot of concern with, as we're in a kind of an economic downturn in a way with COVID, community support has been down for some organizations, and thinking about like, how do you recover from that, and using that as an indicator to switch gears and look for new sources of funding, or, utilizing the government availability of funds through PPP and EIDL and all of those great resources that came out to help bridge the gap for organizations. Those are a few red flags. Maybe Josh, you want to jump in, and I don't know if I'll come up with any more to throw back in there as well.
Sure. Thank you, Ellie. And my CFO and I review our budget we have a monthly we meet every week, but every month we review the monthly. Where was our budget? Where was the actual? What was the variance? And then we go over the top 4 or 5 variances in that budget, every month. And my CFO is expected to be able to explain those differences, and understand why they occurred. Is it a timing of a payment that's going to get pushed later in the year and it won't affect the EBITDA of our company, or is it something that will have? I think those are great recommendations. And I've been fortunate enough I started our company in 2008, and we've grown to over 100 employees. So I've been fortunate enough to have this experience to understand what it is to run a very small company when it was just me and my wife, and now to, small to medium size with 100 employees. These red flags, as executives, there's only so much time, right? And I can't see what each of the employees are doing, and Michelle and Jeremy can't see what's going on in every one of their facilities. And I think what we try to do is create dashboards and indicators, that allow us to say maybe I should dig into this. And we can only kind of react to what we observe. So what's the red flag when it comes to insurance? It's probably not on a dashboard. I want to encourage each of you to think about loss ratio. All right, and I'll give a little bit of education and then hopefully explain why that's important. if we're going out and buying milk or building a building or manufacturing a car, there's a cost of goods sold in each of those products that the company comes up with. And then there's a profit margin on top of that. In insurance, whether it's the company or the broker, they're selling a promise to pay claims. And there is no cost of goods sold. Right? Every company has overhead to turn on lights and pay underwriters, but there's no cost of goods sold, right? So, and especially as you get into larger and larger organizations, their largest cost, that cost of goods sold, is what your losses are. And of course, nobody knows for certain. It's all a guess about how much a organization will have in losses in the future year. So what underwriters do is say, what were the average annual losses over the last 4 or 5 years? And they take a look at what the predicted losses are going to be. And then, you know, to oversimplify the whole process, they're going to double or triple that. You have claims of $1 every year, they're going to want between $2 and $3. So, and to understand what your average annual loss is complicated, and it takes some expertise. And nobody outside of the insurance industry, I would expect to know. But what you can know is, what's my loss ratio? And if you know that you know how the insurance company will look at you. So understanding what claims were paid as a numerator and what premium was paid as a denominator, that's something an insurance professional outside your organization or the person that's on your team that handles insurance should have an idea. If my loss ratio is 100%, over the last 4 years, I have $4 million of claims, I have $4 million of premium, you've got a problem. You got a big problem, because ultimately they're going to double it up or triple up whatever you're paying on an annual basis, right? So obviously, you know, whether you're paying $1 million or 10,000 or 5 million, the number to get on your dashboard that you should be looking at, hopefully you're not only looking at it a week before you get the renewal. This is something that probably makes sense to look at once a quarter. What's my loss ratio? So you as an executive can say, oh, our loss ratio, I'm telling you the loss ratio, if it's at 50%, you're going to get, you're still going to get a significant increase. If you're between 30 and 40, you're going to get a minimal increase, and under 30, it should be very, very little. But that's that once a quarter on your dashboard. If you see it going to 60 or 70%, you should know, all right, when we budget for next year, we're going to get a significant increase here, especially in this hard market. So that's the red flag. It's probably on few dashboards right now, but I would encourage you to talk with your CFO, many times handles insurance, and say, what's our loss ratio? You know, that will help predict how your expense, how this line item of expenses is going to be affected.
Thanks, Josh and Ellie. Look, you know, things don't go to plan. And probably most of us here wouldn't have jobs if everything went beautifully to plan. So, you know, having those dashboards, mechanisms in place to identify variances, red flags in time to respond to them is a really huge part of the work that we can do to make sure that we're managing for all of the variables, including those related to risk. Part of that, though, is like flipping the equation to how do we get ahead of things, and what can we be doing to stack the odds in favor of success. And so Jeremy and John are going to lead us in our 2 topics sort of related to that, with Jeremy starting off. Jeremy, tell us some words for the wise. What are some of the things that we can be thinking about and doing to increase our odds of success?
So depending on the size of your organization, one thing that you should not forget, and coming out of COVID, we've all become quite comfortable with technology, and we're doing more with technology. But if you have contracts, if you're a charity that has contracts, you need people that have historical knowledge. It's very hard. It doesn't matter what technology you have. Relationships matter in this work, right? So, you know, technology is only as good as people that have entered the right data, that have put in notes, And I can tell you from experience, that doesn't happen as well as you think it does. But having someone in your finance office that recognizes how a contract should be spent, that recognizes something unusual, goes a long way to mitigating risk. And in those situations where we have walked into a real crisis, we find that the crisis is magnified when the people have no clue about what's going on. You know, everyone is gone. Nobody knows where anything is, and everyone assumes that somehow a database has all that information. And that's never true. So people matter, relationships matter. Don't take your eyes off that. The second is, not all organizations have dashboards. I think a dashboard is important, and certainly depending on their size, it's even more important. If you have a dashboard, you need to understand what net numbers mean. So for those of us who depend a lot on fundraising, we need to know what it costs us to raise $1. And our boards of trustees should know what it costs us to raise $1, right? There's a risk to not knowing what it costs to raise $1, because when you have a donor that asks you a question and you can't give a straight answer, that's a relationship that can be lost immediately. So, and when you go into a downturn, as we often do, knowing where to cut costs is entirely dependent on knowing what's working and what's not. So when you know what your net number is, you can make a decision. And then finally, a comment about red flags. I said this the last time we were all together, and this is even more true today coming out of the pandemic. So one of the things we did during COVID was we went electronic, right? Many of us are using debit cards, credit cards, electronic transfers much more often. Years ago, someone told me that the greatest risk to the organization was me. And I was surprised. And I said, what do you mean? And this was a long time ago. And he said, well, you know, you're charismatic, people like you, we trust you, which means that you can get away with things that others may not be able to get away with. And I never forgot that, because, and since then, I have seen exactly what this person meant. Look, this is not an issue of trust, right? My expense account needs to be reviewed by somebody else other than my CFO. And at the Children's Village, that's a trustee who is responsible for budget. Right now, it's our chairman that signs off on everything that I spend and get reimbursed on. And it is also my job to have a system where every one of my senior executives who has a American Express card or a reimbursement is reviewed. That's work. That's real work. I mean, at Children's Village, 1,300 employees, we have hundreds and thousands of dollars in credit card charges every month, and they're real charges. But somebody needs to take a look. Sometimes there are mistakes. You know, somebody goes to the supermarket and uses a company card, and it's as simple as saying, "Hey, you know, that doesn't sound right. Let's make a reimbursement." Sometimes it could be much worse. And knowing where the problems are is only possible when somebody takes a responsibility to look and approve.
Thank you, Jeremy. And thanks for mentioning the pandemic, because John is going to tell us a little bit about some of the pandemic specific challenges that we want to be thinking about right now proactively. And also for raising the issue of technology. I see we already have a question for when we get to audience Q&A for you, Josh. So take a peek there. So you'll be the first one to answer once we get to audience Q&A. But before that, you know, John, I've been saying to our staff at Good Shepherd that all of us who've been all hands on deck trying to lead the organization and our work through the pandemic, we all should be getting an honorary PhD in nonprofit management. And I think that there have been so many challenges that have that we faced related to the pandemic that, you know, we really maybe never faced before. And that's also true in the area of finance. You know, for the first time recently, Good Shepherd, as one of the large nonprofits, was for the first time eligible for a PPP loan. So we're just navigating that now, whereas smaller organizations were ahead of us in this. So, you know, talk to us about some of the things related to pandemic level financing, some of the funding streams and some of the financial risks that have come with navigating the pandemic, and what should we be planning for?
I think we're going to need hours, but I'll try and be brief and touch
in
on
5 minutes or less.
You know, dovetailing into what Ellie said and what Jeremy said and the rest of the panel, you know, thinking of the pandemic has brought about technology concerns, risk management issues, considerations on budget and management and cash flow modeling has been really important during the pandemic. And we've talked about the budget process. You know, Jeremy mentioned knowing where to cut costs when you need to cut costs. You can't just slash away at salary or those individuals that are helping you achieve your mission. You need to understand what programs are delivering on, what programs are, what the programmatic outcomes are. And I know people use that word, programmatic outcomes, but what does it mean? How are your revenue streams for funding these programs and initiatives being accomplished by the relative expenses that you're putting into it? And not all programs have to yield positive cash flow. I mean, there are qualitative and quantitative aspects that need to be considered, but has the organization stretched itself too thin? Or have you grown so much that you are in every program or every other type of initiative, and that you need to refocus your efforts? And I think that's what the pandemic has brought about, a certain refocusing on what the true and core mission of some of these nonprofits are. Couple that with cash flow modeling and understanding how you exist from month to month and went to week, actually during the pandemic for some of our clients. Understanding liquidity and liquidity ratios has really been important. You know, when I look at financial statements and I look at a trend over the last couple of years or even over the past 5 years, you know, sustained losses, negative operating cash flows, deficits that are accumulating and growing, those are all red flags. We talk about financial red flags, but what we don't see is how what initiatives are being put in place that can help to offset those negative factors that are being done. And that's something that should be top of mind to management, top of mind to boards, and as well as to your external advisors that are servicing you. And just to talk about communication, and the pandemic has brought about a lot of communication between boards and executive directors and the rest, but really modeling and looking into how are these budgets developed. You know, I've had some clients, unfortunately, that the budget is done by one person and they take the line items and just add 1% or 2% without really diving into the details to understand, are these true expenses? Do we need this? Where else can we reallocate to best serve the organization? So there are ways to look at the crafting of this information. Now, you know, Jeremy made a very important comment that I think I want to touch on as well regarding policies and procedures. You know, it's important to have staff that know what they're doing and understand the procedures and understand their day-to-day tasks, but is it formally documented? And if not, what should happen if somebody wins the $1 million or $2 million and leaves? Or I guess that's not that much these days, but you know, if they decide to leave your organization, who can step into that role and accomplish the tasks on a day-to-day basis, and you know, to keep the organization running? And that leads to internal controls, which brings us back full circle now to Michelle's initial questions about all these various funding streams that are coming in from the government now. You know, we've seen funding that has come from PPP, which I will say is not subject to single audit. Everyone should breathe a sigh of relief with that. So it does not need to be on your schedule expenditures or federal award from a compliance standpoint. But that doesn't relieve the organization of the accounting for it from a recognition of either showing it as a liability or showing it as a debt model, or showing it as a refundable advance? And when can you recognize the forgiveness that's necessary, along with the documentation? Again, compliance comes in many facets, doesn't necessarily need to be just numbers. If you don't have if you bring on risk because you're not compliant with some of these matters, even if you're not required to from a single audit perspective, you bring risk to the organization. There have been other funds that have come in. Think about any of those out there that have shuttered venues. There's a new grant that's out there regarding shuttered venue agreement organizations. There's funding coming in from that also may be potentially subject to single audit and federal compliance requirements. If you are a healthcare organization and you have provided relief funding, there is also now a concept of lost revenue and a concept of recognition and reporting under single audits for those funds that are there. How do you document all these expenditures? How do you keep track of all of this information? It's going to be very important for your eligibility requirements and for your ability to demonstrate compliance in your expenditures going forward. It's important, and I stress this because there are risks, right? If you are ineligible, or if you do have compliance findings, whether they're control related or whether they're dollar limit amounts, there are actions that the government can take. You can have costs be deemed not forgivable. You can have costs that may need to be reimbursed to the funding agencies. You may be subject to legal action. You may be subject to additional suspension going forward for future grants and contracts to the organization. So the risk is all inclusive to the organization when you take on these federal funds. Couple that you may not have had this funding streams in the past, and you bring on a whole new realm of scrutiny and complexities that the organization probably had not faced in the past. And I don't mean to scare anyone out there, but it is a challenging time when you accept these types of funds. And I'll pause there because I can go on forever on this topic, but I know we have other topics to jump to right now.
Thanks, John. We're going to switch over now to audience Q&A. We have 2 questions so far in the Q&A. If there are others out there, please be sure to enter them into the Q&A tab rather than the just general comments. The first question is for Josh. The second is for you, Karin. So take a peek if you haven't already. So Josh, the question for you is related to cyber insurance. What, in this now world of increased technological usage, what should we be thinking about related to safeguarding our data and being prepared for potentially being on the receiving end of a cybercrime attack? Great question.
So, the difficult part, what should we do to plan for this? It is really, it's almost more of an IT question. We've got a great chief information officer that, can build firewalls. And frankly, what technically can be done to protect your information is the answer to that specifically, I'm not qualified to answer, right? And we've got a great professional on staff that helps us. But as it relates to my area of expertise, cyber insurance came out. They started offering this 6 or 7 years ago. And I can recall meeting people and saying, yeah, I'm an insurance professional, but I have seen no claims. And I can't tell you that I wholeheartedly believe in this product. But the world is totally turned upside down now. And every single nonprofit should have this. And I believe that in the next year or so, we're going to see it, mandated by the city and anybody that gets city funds. There's very little our legal system is doing to stop these cyber attacks. And there's all, different layers. There's the whaling or phishing where you get faux emails and it says, Jeremy said you should wire $50,000 to this bank account, Mr. CFO. Please do it. And it looks like it comes from Jeremy's email. So there is insurance. Right now, this insurance is still not overly expensive. Okay, that's number one. We're talking for major organizations like the one Michelle and Jeremy runs. the cost for cyber insurance for organizations that are, hundreds of millions of dollars is less than, I don't think we have a client that's paying $50,000, right? I mean, that's at the the biggest scale or some of the largest scale. The cyber insurance for small organizations under $5 million, you're talking about $1,000, $2,000. It's still very, very inexpensive right now. There's not a nonprofit in the city that shouldn't have it. So we have these cyber attacks, we have these whaling or phishing attacks where they try to encourage you to send money to somewhere else. The cyber attacks where they just steal personal identifiable information and or credit card information. Now, you as an organization are responsible for notifying everybody and providing credit score protection. That's extremely expensive. The cyber insurance will pay for all those notifications. Cyber insurance pays for lost income. If you do wind up losing income, maybe the largest number and severity of claims is in ransom attacks. So we have had our clients over the past 18 months, it's got to be close to a dozen now that have claims that have been paid over $150,000. We've got one client that was cyber ransomed for $750,000 and the policy paid out. So these cyber criminals are attacking our industry because, right, in many of our clients, they're still hosting their information locally because I'm sure if I asked everybody to raise your hands, who's got extra funding for the migration of your information locally into a cloud, we'd see no hands. The government's not paying for that. So many nonprofits are still hosting information locally, which means when these cyber attackers can get into your system, they can block out, they can create firewalls that disallow you from accessing your own financial information. We've seen it more than once where the organization said, we have none of our financial records, we can't access them. We got the FBI involved and they paid $750,000 just to get access to their own information. So the ransom attacks, are rampant. Everybody here needs to have that insurance. It's not that expensive. The planning to stop it, you can have dual factor authentication and you need to get an IT professional in to review what your policies and procedures are. And the only other thing I'll add, I don't want to steal all the hot air in this room. One of the things we've implemented to prevent the phishing and whaling, and I think they grab information off of LinkedIn and try to hack, because it's like once a week, my finance department gets an email from Jay Lamberg at LamIs saying, send money here. And sometimes they call our CFO by the wrong name. There'll be little stuff that my finance department picks up. But we implemented, this is really simple. Everybody could do it later today. Any transfers of money need to be two-factor authentication within your organization. So if it's a voicemail or an email, that counts as one. Then there's got to be a text message or a phone call. It's real easy. It has to be verified by Jeremy. Just text him and he'll text. I've never seen any of these hackers have the dual, these kind of two factors. So Michelle wants to transfer money and she sends an email to the CFO. All he or she needs to do is text Michelle. Michelle confirms it over here. It takes 2 seconds, and we have prevented a number of attacks. And again, my organization's 100 and some people. There's 100 entry points. Jeremy, you got 1,300. There's 1,300 cell phones or laptops that are out there that are entry points. So I hope that's helpful. If you're members of Nonprofit New York, Nonprofit New York is now offering, you can get a cyber quote right on their website. We've partnered with them for that. If you're a small organization, don't know where to get it, your broker should be able to deliver it to you, but everybody needs to have that.
Yeah, thank you, John. I mean, I have received so many of these phishing emails and inquiries and texts, and I have to admit, there have been a couple I almost fell for. Some of them are very sophisticated, and sometimes it really is something as simple as just like feeling like the tone of the writing is doesn't really match or is off, but I've now taken the stance of making sure that I am assuming that these things are fraudulent and have to prove that they're not. And I've seen many of my colleagues become victims. And so we're doing the dual factor authentication. And yeah, it's it's an extra step. It's a little bit of a pain, but it's nothing compared to finding yourself a victim of one of these attacks. So our next question is for you, Karin. Had there been any movement on the recovery of funds from the New York Charities incident 2 years ago? Understanding was that there were funds recovered and a receiver was appointed. We're just wondering if there's an update that you can provide.
nycharities.org was really a platform through which people could make donations to charitable organizations that participated in that platform. So I make a contribution that I want to go to ABC Charity. I do it through newyorkcharities.org. They ceased operation because someone in the organization was ill. We immediately brought a lawsuit. We froze all of the money that's in the bank accounts. It's a little complicated, but pro bono legal services were provided to the organization and to the former executive director. And we're working together. We're on the same page with them. We're working together to get the records that we need. And actually it was this week that we're dealing with their web services so that we can find out if any more organizations out there did not receive their donations, so that we can go back into the bank accounts, and there are hundreds of thousands of dollars in the bank accounts, so that we can figure out what is the finite list of organizations and how much is each one owed. So the money that they had, I think, when they stopped functioning is safe. And we are working, we just had a conference yesterday on this, and I've learned in 40 years never to predict dates of completion of a project, but we are certainly on top of it. And the court is overseeing it as well. There's a judge assigned to it. So we hope to be able to distribute the money as soon as we get the rest of the data from the platform.
Thank you, Karin. We have a third question in the Q&A, and if there are any others out there, be sure to add them. We might have time for another after this one. I'm going to throw this out to the whole panel. Anyone who has an opinion on this, jump in. Request is for opinions on hiring management administrative services. And maybe most knowledgeable among us could say a little bit about what management administrative services entails. Anyone want to field that one?
I'm not exactly sure how to field it because because of the way that they've capitalized it. Is management administrative services an actual company, or are they just asking about like kind of back office support in terms of like outsourcing some of the operations functions? I will take the latter and assume that it's about outsourcing operations functions. And I obviously am a little biased because I work for your part-time controller and we're an outsourced accounting firm. But when you are outsourcing some of these operational activities, perhaps it's an administrative assistant or accounting functions or HR, whatever the case may be, you have to consider that, hey, you're going to get the level of expertise that you need at the level of effort that you need without having to hire and figure out how to hire the qualified people to do that if you go with a reputable firm. So that's my opinion. Do your homework. Interview the organizations that you want to be working with, get references, talk to people that have used them, and understand what their capabilities are.
I'm happy to add, I'll be brief. I can recall as my company has grown, when I first founded the business, I said, I want this business to have all these skills, and I don't want to outsource anything. I don't want to outsource creating certificates or scanning this information. I wanted to master all of it. And as my business has gotten larger and larger, it's difficult to be great at everything. And what allows your business to scale is outsourcing functions that take that take high skill. So if I was a small nonprofit and I was 10 or 20 people, I could find the money and time to develop a great CFO, but I could outsource it to somebody that might be great. And by the time I'm Michelle or Jeremy's size, yeah, I need to have that function, but I have more resources to hire, experts and very skilled professionals in there. So as I've taken this journey over the last 10 or 15 years, I would say outsourcing where there's high skill needs is a way. Don't look at it as giving away a skill set. Look at it as enabling your organization to scale faster by the use of grabbing better expertise than your organization may be able to afford.
I would add, I think that's right on. There are lots of things that you need to outsource, but you need to know the value of what you intend to outsource and which aspects of it should be outsourced and when, right? So in our case, we have a fleet of vehicles that we used to manage internally. And a few years ago, we outsourced it, and it was one of the best decisions we made. We have people that know what to do with a fleet that manage thousands of more vehicles than we do, doing that for us. But there are also things, regardless of your size, where you might need a thought partner, someone that you can talk to. In those cases, you can still outsource a function, but you better, I think Ellie mentioned this, make sure you're working with a reputable group so that the kind of intellectual partnership that you need when you need to have a conversation to understand a process better, to make it better, you have someone on the other side that's willing to engage in that conversation, because we all need those conversations.
Yeah, I'll just add that I echo everything that Ellie, Josh, and Jeremy have said, but it's important to look at the cost benefit. Like you said, Jeremy, you need to understand the cost of using your own internal people and hiring them, and actually, outsourcing the cost. There's nonprofits go through various cycles of outsourcing, using shared services, using GPOs from group purchase orders to reduce cost. And all of that is great as long as you understand who you're partnering with and that they're actually being successful in what you're trying to achieve. And I think that's the key.
Thanks, everybody. So we are almost at the end of our time. I just wanted to invite the panelists, if there's anything that you would like to share as sort of your closing words, or any aha moment that you had from the conversation, something you'd like to share with the audience. I'll invite you to just unmute yourself and jump in.
Just one thought, going back to Michelle's earlier comment that not all of us that come into this work are financial professionals. We come for a variety of reasons, but if you are an executive in a charity, you've got to own the financials. You just have to. You cannot delegate that to anyone else.
And just to add on to that, there's a lot of options out there to get the education that you need in order to be able to own the financials, whether it's working with a consultant to give you one-on-one training or board training so everybody understands, whatever the case may be. But don't just put it off on, oh, I'm going to hire a CFO and they're going to do it and that's their responsibility, because it's not, and use them as a resource to learn also.
And I'll just add one other thing. With all the new funding that's coming in, it's continuing to change on a day-by-day basis. So compliance, understanding the risks, and all the changes that are coming is not something that can just be done instantaneously. You really need to understand and read and lean on your advisors as much as you can to help you understand what's going on with insurance.
And look, it's always important to reach out for help if you need it, right? And if you see something's going wrong, I remember getting those words of wisdom from Karin in the past. It's don't try to cover it up, hope that it will go away or no one will notice. Reach out and get assistance. Josh, did you want to add a closing word?
I just wanted to say thank you. I thought you did a great job, as I'm sure I can say for all the panelists. Great job, Michelle. Thank you, everybody at New York Media. It was a pleasure being here.
Thank you. This was a great panel, a lot of expertise here. Hopefully everyone will jot down your names and contact information because there's some real expertise here that folks can tap into. And I see that Zach's face has appeared, which must mean that our time is over.
Well, thank you so much, Michelle, and to all the panelists. That was a really great discussion. So much ground covered, actually. And it's always great to hear that people are advising nonprofit leaders to not just hide the problem, right? To deal with it. And while you can delegate responsibility, you can't necessarily delegate accountability, can you? But of course, nonprofit leaders can't do it all by themselves. We got another panel of experts who are going to be talking about collaboration with staff and board members. But before I introduce our moderator, I would like to just let everyone know that if you have not gotten your exhibit packet, it will be provided after today's webinar. So don't worry. If you got any questions, of course, feel free to drop it into the Q&A or the chat and we can get some real answers for you. But without further ado, like I said, we got to hear about how nonprofit leaders got to work with their staff and their all important board members. And moderating this discussion is Claas Ehlers, CEO of Family Promise.
Thank you very much, Zach. Welcome, everybody. So as Zach said, the workshop is effective leadership collaboration of staff and board members. Critically important. We've got 4 fantastic panelists. I'm going to ask them to introduce themselves in a moment. Our format's going to be very much a dialogue, a conversation. Our hope is that both strategic and tactical, that you get some strategic insight from the whole conversation, but also I think tactical pieces you can walk away with, right? I think a good workshop is always one that you leave with and say, here's something I'm actually going to directly apply. So these fantastic folks are going to do both. So with no further ado, I'm going to ask each one to introduce themselves. I'll call them out as a point of order here to keep it all orderly, and also ask them just to illustrate their relationship with boards, because that's going to be the critical thing, right? Is that staff board relationship. So Andrea, I will start with you.
Hi, and thank you. So I'm Andrea Cantor, and I'm head of not-for-profit banking at BHI, which is a full-service commercial bank based in Midtown Manhattan. Our team focuses on delivering value-added financing and banking products specifically to nonprofits. I've personally been in finance for over 25 years, and for the last 12 years have focused on providing banking services and financing to healthcare and not-for-profit organizations. I'm also a volunteer and a board member, so hopefully my comments today will bring perspective both from my professional experience working with nonprofits as well as my own board service.
Thanks, Andrea. And I'll ask Arva Rice to introduce herself. Hi, Arva.
Good afternoon. Thank you so much for inviting me to be part of this important conversation. As you heard, I'm Arva Rice. I'm president and CEO of the New York Urban League, which is a longstanding civil rights organization that's celebrating its 101st year of work in the New York City community. And we are one of 90 Urban League affiliates around the country. And our work focuses on education, employment, housing, and healthcare all around the country, and here in New York City focuses on education, employment, and advocacy. And I look forward to this conversation. We have a board of 19 directors, which for some organizations may seem large. Vernon Jordan was the CEO of the National Urban League, who recently passed away. And Vernon advised us that if you bring 19 people in a room, it's going to be very difficult for them to come to the decision to fire you. So every urban league has a very large board of directors. They're usually corporate, and so we can have either a corporate seat that is rotated based on the needs of that organization, but usually it's a corporate setting, and that will have some impact as we talk about the conversation and the questions today. And have been in this role for a little bit over 10 years. I'm the second female to be the leader of the New York Urban League, and I'm looking forward to our conversation today.
Thanks, Arva. Happy birthday, New York Urban League. Great organization. And I will say that we have a board of 19 as well, too. And I also think it's always important to do things in prime numbers. So with that, I will turn it over to Ethan Kahn to introduce himself.
Hi, I'm Ethan Kahn. I'm the partner in charge of the New York City office of the Bonadeo Group. It's an accounting and auditing firm. I've been doing accounting, auditing, tax, and cost reports for well over 2 decades, almost 3 right now. And I've been very involved with boards over the years, many boards, and have seen all sorts of different types of dynamics that go on with the communication between boards and senior staff. And so I'm really excited here to be part of this terrific group here today. I think that the experience that I could bring and the team that I'm with will really give you great takeaways. Thank you.
Thanks, Ethan. And last but not least is Stanley Capella, and then we're going to start with the question.
Okay, my name is Stan Capella. I'm the VP for Quality Management, Corporate Compliance Officer for HeartShare, which has 21 board members, and they're also tied in with the HeartShare St. Vincent's, which has 18 board members. So the HeartShare side has all developmental and intellectual disability services. The HeartShare St. Vincent side has all the children and family services. And I've been doing this for 43 years. And the other piece that I bring to the table is I'm a team leader and a peer reviewer for the Council on Accreditation. I've done 140 site visits in 37 states and 4 countries. And since the pandemic, I've had the pleasure of doing 17 virtual reviews. All right, so I've done a mixture of nonprofit, for-profit, military, as well as government agencies. So I come from a wide range of backgrounds. All right, and I'm very much looking forward to participating.
Thank you. Thank you, panel. This really is a terrific panel. I love the diversity of perspective and experience that we have here. So I'm going to jump right in. The first question I want to ask, I'm directed to you, Andrea, and that is, what are some key best practices you've seen employed with the pandemic to keep boards engaged and providing needed support and strategy and guidance? This obviously has been an incredibly difficult past year.
Thank you. So in thinking about this question, 2 expressions came to mind. And one of them, Michelle said in moderating the last panel, she said, all hands on deck. And it sure was. What a wild ride it was. And the other expression that came to mind is divide and conquer, because there were so many different challenges and it didn't make sense for our leadership team and our volunteer leadership team to work on everything. It just wasn't going to make sense. And so the leadership team, both the staff leadership and the volunteer leadership, came together and divided the key areas that we needed to focus on, and we established task forces. We also engaged other volunteers who weren't at that point formal members of leadership of the formal leadership team, but they had those are people who had an expertise and an interest in getting involved. And so we pulled some other people into the process, and then we were able to leverage individual strengths and contacts and pull in external resources. And as I described the different kind of pillars that we established, you'll understand what I'm talking about. So for example, finance, we had to completely rethink our budget for the current fiscal year and beyond. As soon as we realized this may go on for more than a few weeks or a month or so. I think we all had that experience early in the crisis, not knowing how long it would be and kind of the reality sinking in as time passed. So revamping the budget and our projections, considering the PPP and other stimulus opportunities and how and whether to pursue those things. Fundraising, the impact of fundraising of the pandemic. We were fortunate enough to obtain a challenge grant, but without this working group, this task force, I'm not sure we would have, because I'm not sure we would have approached some of our benefactors to ask them for that. We established a COVID emergency fund. So those were all the finance things, and that was one task force. The next task force was facilities, and they focused on building safety, staff safety, different rules coming out from the CDC and from New York State, various protocols to keep everyone safe. Our organization also ran a school, and so we had to think about the delivery format to switch from in-person to Zoom for that group of programs, and parent engagement and the summer program. So each of these task forces was working in their own silo, and then communication, coming back together. So as a best practice, coming back together, getting feedback, not getting tunnel vision, being open to feedback and input from other people, and also setting up a communication strategy to our entire community, our constituents, and across leadership, because we're all ambassadors for an organization. So making sure that the leadership had the story and had the update, and so that they could represent that out there. I do want to say, before I close my remarks on kind of best practices in a crisis, is we did drop balls. We didn't keep everything in the air. And it was such an important learning experience for the organization, because we're able to now say, hey, look at those balls we dropped, and establish some more formal process. There are things that our office staff was doing that, because all of a sudden they were working remotely, they stopped doing, and it took us months to realize those things weren't happening anymore. And so, and of course, volunteers turn over every few years. There's new board members, but the staff turns over much less. And so really just improving the coordination across the staff and volunteer teams, and codifying more so that fewer balls will get dropped next time. And that's all I have on it for now.
Thank you, Andrea. Yeah, actually, we did the same thing too. We established task forces to kind of expand the capability of the board, keep that engagement, and also keep the board from getting core operations, really working in areas where they can contribute. And I think this really segues beautifully to the next question I want to ask, and I want to pose it to Arva, which is how has your relationship with the board evolved over the past year, right? So Andrea talked about sort of these dynamics during the pandemic. How has it changed, and are those changes lasting in your opinion?
Yeah, my response to the question really begins where Andrea ended, and that is on communication and the fact that we do drop balls. And so that does happen. And so when I think about the evolution of my relationship with the board, I think about it basically in two areas, and that's around behavior and about my role. And in terms of behavior, the biggest difference, which I think is really an improvement, is a difference in the way that we were able to communicate. I also had a change in my board chair, also during the time of COVID as well. So I had a new board chair who was just stepping into that role, and then COVID hits. And so I'm getting used to a new person, how he works and communicates. And then, the whole world is breaking loose, and we're trying to figure out how to manage staff and all those other sorts of things that Andrea just spoke about wonderfully and well. But one of the things that, not surprisingly, the difference is there was just an increase in communication with the board. As I mentioned, I started out by saying I do have a corporate board. Most of them, when we interview them through the process, they talk about why the Urban League's mission resonates with them, why they talk about why they believe that inequality is unacceptable and why they want to work for that. But it is a corporate role. And so getting them to kind of really to focus in on the moments of the importance of this moment really became to the fore during the midst of COVID. So my board chair just increased communication. And so he was, sending updates on a weekly basis. He was providing them with, kind of real time updates. So I think that was really important. We also had an increase in joint problem solving. So obviously, as Andrea mentioned, we were also looking at our finances. The New York Urban League, because we do work primarily with African Americans, actually saw an increase in support for the organization over the course of the last year, right? As we had individuals who were looking at, their systematic racism. And so what can we do in order to help and to support and do that? And so even though I mentioned that we're in the 101st year of the organization, we were supposed to celebrate a whole year of centennial activities. And so the biggest one, our dinner, we had to make a decision to not do it in person and to do it virtually, obviously. But it took us a while to come to that conclusion. We love a good party, right? We love to come together as a group and profile all the work that we do, and to make that really difficult decision was one that the board really had to help us in making that decision. So they were involved more at a level of problem solving that they probably hadn't done in a really long time. They were also involved, obviously, in the financial decisions, trying to figure out, we had a loan that was out and trying to figure out how to pay that loan, how to renegotiate, having those conversations, what can we do based on our current projections, and a difference in projections because we didn't have that centennial year. The second thing was there was a difference during that year in my role. As I mentioned, being the head of an African-American woman and the head and the leader of an organization that focuses in on the issues of African-Americans after George Floyd and during the midst of a focus on policing. And so I was called upon to serve as a co-chair of the Police Reimagining Commission with Jennifer Jones Austin of the Federation of Protestant Welfare Agencies and Wes Moore of the Robin Hood Foundation. Well, these are two significant people in the city and the community. Many of the folks and friends of many of the people who are on these panels, and also a part of the audience. And so my board of directors kind of sat up a little bit more straight, saying, oh, wow, ours has been called upon to have this significant role with NYPD and with two significant leaders here in New York City. And so they saw that the New York Urban League was once again being called upon by our city, by our mayor, by our governor, in order to let critical issues. And so it changed a little bit of my role in the way that they were looking at and perceiving me. And my last thing around the role, and I think that particularly for all the CEOs, all the executive directors, all the presidents that are on the line, is that we really had to take out our capes, because we really had to operate as superheroes during the midst of a crisis that we did not know was coming. We did not know where the middle would be, and we certainly don't know where the end is. And so at different points in my career, people have questioned, they're like, Arbor, you have this even temperament, and a lot of things are going on, and you have a tendency to just kind of approach it like this. And during COVID, people started to appreciate that. They really started to appreciate the fact that a person who can manage a lot of different balls and still be able to maintain a kind of calm composure throughout it. So I think that those are the two ways in which that role evolved, is in terms of behavior and in role. And my goal is that those continue to be in place moving forward.
Thank you, Barbara. And I'm going to just ask you for a very, very quick follow-up on this. To what degree would you say those changes have been permanent, or do you see it really a reversion back to how it was before, or something in between? Which of those three would you say it is?
Yeah, I would. My hope is that they're permanent. I think that the increase in communication, the stronger engagement in problem solving, and the view and understanding that we as CEOs, presidents, executives of nonprofit organizations do have to put on our cape sometimes. And so for the degree to which board members can recognize that, I think is something that I want to see become a permanent part of the New York Urban League.
Thank you, Barbara. So we've talked a little bit about finances in both of your questions. We also talked about dropping balls, and as a Mets fan, I just want to say that's very familiar to me. But I'm going to turn to Ethan and ask him to talk about the board's role as regards finances, and how has that changed during the pandemic, during 2020?
Sure, Star. So that's a really interesting question, and it actually is a good segue coming in from Arva. The board as an overarching nuance. They have the vision, they've got the strategy. They've been doing that for years already, and it came to a juncture where they really had to get involved with direction and make some big picture decisions based on the events of the recent year of COVID-19. A lot of what the board does is predicated on the information that the board receives. And then, because they're only there for a short amount of time versus all the staff and especially senior management that are so involved on a day-to-day basis. And it's up to the board, it's up to staff to provide them adequate and the right amount of information, not too much and not too little, but it's also up to the board to ask the right questions so that they can make the right financial decisions. And when once the board reaches a point where they understand what has transpired, which comes from those questions, they could then deliberate. They could then add their vision, their strategy, and their direction for the best of the organization. Those spending decisions can include whether to embrace new grants, whether not, whether to discontinue a program or open a program, whether to go to new geographical locations, stop funding streams, get into new forms of financing such as PPP. But data doesn't just include financial data. It also includes, as the captain of the ship, the board actually receiving and being in tune with what was going on in past years versus the current year in non-financial data, qualitative data. How are the staff doing? Are the staff up to what we would like them to do in terms of our vision? We began this past year monitoring, COVID-19 on a day-by-day basis. That kind of grew to weeks and months, and now we're in year number 2, and everybody's trying to see how we're going to roll out of this and get back into a full reentry mode. When the board does comparisons, when they look at analytics, they should be comparing, let's just call it fiscal 21 for now, for June 30, 21, to fiscal 20 to understand the effects of the pandemic, but they should also be comparing to fiscal 19 to understand how does the fiscal 21 compare to a real typical year, since we want them to get both aspects. They should be asking the questions such as, what are the new funding? Any new funding, whether it's PPP or whether it's regular state, city, or some other grant? Are there any new rules, any new audit rules, such as uniform guidance? Now, one of the things that NIPRA had put into place years ago was the fact that the board should be accountable for the due dates of the organization. So if there's uniform guidance, new uniform guidance rules, because they got so many federal dollars, the board should really be apprised, of that. On a more specific level, there was, on a financial level, initially there was a variety of responses with staffing where organizations didn't feel like we had enough and adequate funds to staff everybody because they weren't working to capacity. When PPP came out, for those organizations that took advantage of it, they found it just the other way. They were trying to see how could we spend all these dollars and not going into the double dipping. So I think that the board should understand what actually transpired so that they're clear, they're comfortable, so that they could sleep at night. And then as a last point in terms of finances, the board should expect and management should expect to talk to the board about the leases. One of the largest costs typically of an organization, other than payroll and benefits and taxes, is occupancy. And because organizations have gone remote or hybrid of remote, some of those leases, which are not yet up, may have been negotiated. Some of them are supposed to have increases every year, and we may or may not have the funds for the increase. We may just want to completely vacate the site. And that's just another important aspect that I think the board needs to know in terms of the direction, providing a vision for the organization going forward.
Ethan, thank you for that. And I think that's a really critical point. For us, it was interesting. Right before the pandemic, we ended up securing a building for us, and then the pandemic hit, and a number of people moved out of the area. A number of people, we worked incredibly well remotely, and fortunately, we did not invest a lot in our building. But if we do it over again, we'd probably become a virtual organization, and I think the board has to be very attuned to those elements. So I'm going to ask Stanley the next question, and this is a question that we're a federated model, so we have a lot of affiliates, so we get these questions all the time, which is, how have nonprofits been able to recruit and retain board members during a time where you can't have board meetings, you can't, it's such a changed paradigm. So Stanley, what would you say towards that?
All right, the key thing, again, since I've done so many reviews for the Katz on accreditation as well as mine, one of the key things that I've found is that does the organization have a good elevator speech? Do they have a good a mission? that they could sell within 5 minutes. Like, in other words, I come before you and in 5 minutes give you a little synopsis that really draws you into the organization. And one of the things that I found very loud and clear is that if there's a buy-in, all right, that you can present to me, or it encourages me to participate or want to be on the board. All right. So in other words, the connection, again, HeartShare is very developmental and intellectual disability focused. HeartShare St. Vincent's side is very children and family focused. So they have two different audiences. But again, how do you go about, are you good at storytelling? All right. And it's usually that story that about the organization that will draw a person in to want to participate in that organization. The other key component is helping the person that you're recruiting understand what their role is within the board. Because one of the things that often, and then this is where the orientation becomes extremely important, because when you say, okay, I am willing to be a member of the board, and then you get assigned to a committee, like especially the incident committees. All right, you get assigned to the incident committee, so you are now in charge of reviewing all the incidents. And then you had this new board member sitting there and saying, okay, I reviewed all these incidents, but what am I supposed to do? What are you looking for me to do? And again, if you come from the program area or you come out of that social service end, you would understand that. But if you're from the business end or another end, you may not necessarily understand it. So the key ingredients are the story. Do you have that story about that organization that will make me buy into this mission? 2, what is my connection to what the organization is doing? All right. And 3, if and when you get that person to become part of the board, do you possess the ability to give that person an orientation so they clearly understand what their role is and what their expectations are? And if you can do that, I mean, I wouldn't want to tell you the number of times I've done site visits and I say, okay, tell me a story about your organization. All right, that makes me buy in. And I won't give you the Johnny the mailbox story because that takes time. But again, tell me a story that makes me buy into the organization. And if you can do that, you'll get people. And especially now, because a lot of things are virtual, so it's easier. You're not going someplace. You can do things virtually. All right. But the key thing is, can you really give me a story about the organization? What is the mission? And then what is the hook? What is going to buy in? And if you could do that, you can not only retain the board members, but you can recruit new board members.
I think, thank you for that, Stan. And I'm going to ask other folks to comment on this as well, too, because I think other people may have perspective. And I'll just add this. We've added 4 board members during the pandemic. And I think, I was calling you Andrea and Arva called you Andrea. So I'm just going to call you Ms. Cantor. But Ms. Cantor had said, she pointed out about task forces. And what I'll say to that is doing the task forces really habituated the board to a lot of virtual meetings and virtual work. Right, so that made it more comfortable. So I'll ask if, and Arva, you had a change of board chair during the pandemic. So I'll ask each of the 3 of the others of you, is there anything you wanted to add to Stanley's points?
Mm-hmm. Well, I have to.
Go ahead, Arva.
I was just going to say, I completely agree with everything that Stanley said. And I do think that we've had an increase in interest in the New York Urban League. And so we literally had somebody, you know how you can go onto the website and say, I'm interested in. And so I had somebody log on and say, I'm interested in being on your board of directors. And I was like, that's quite an inquiry. You know, usually they're just like, oh, I want to tutor some kids or something. So we have had people who have definitely shown a larger interest. We've had 3 board members that came on during the pandemic. And I do think that this is a wonderful opportunity for folks who, having stayed home, have realized that just being able to stay home was a privilege. And so many other people had to go and work, and we're responsible for bringing those goods and services to our front doors in order that we were able to stay home. And so I think that just created a sense and a heightened awareness that there are the have-nots. And so what are the things that we can do in order to engage them? So I think this is an excellent time for board recruitment, but we do have to be able to talk about our mission and tell the story.
Yeah, I would just comment and say that, I agree with everything you said, Stanley, as well, and Arva. And, because of the situation that we've all been past couple of months, past year plus already, people, I believe, became much more mission oriented. Their passion to do something to contribute back has been tremendous. They've seen how much the government and how much everybody in their communities, respective communities, have really come together to try to make this world into a better world. And because of that, I wouldn't be surprised. I am surprised, but I'm not as surprised as usual that there would be an ask, or like you're saying, someone would ask, can I join your board? But this is the time. I think this is the time, if you want to capitalize on anything, this is a great area to capitalize on. Get the board members in, get individuals that have a passion for your organization, and make the pitch. Like you said, Stanley, get that one slogan, get 2-3 sentences, really brief, and make that pitch, because this is the time when people really want to give back.
And I'm Andrea. Which is it, Andrea or Andrea?
I say Andrea, but it's all good.
Okay. So Andrea, and I just want to jump in there, and I would just again stress that I think have your infrastructure so that you have very effective remote board engagement, because that's still how it's going to happen. I think we're only starting to get back to in-person board meetings. So make sure that, you're right, we're incredibly primed to attract people to be board members. You want to make sure that they can feel like it's very effective doing this in our current constraints. And Andrea, I'll give you the last word on this before I move on to the next question.
Thank you. I wanted to say that the organizations I've worked with and been involved with that are the most successful at board recruitment and board management have a designated governance or nominating committee or a nominating and board development committee that focuses on this. So that's a general comment. Specifically during the pandemic, couldn't agree more with what others have said. Some people had more free time. Attendance at board meetings and committee meetings went up because of Zoom. No traffic excuse, no commuting excuse. And the things that were going on separately but related to the pandemic around equity and diversity and inclusion touched a chord with people around making a difference in a new way that maybe they hadn't considered before, and inspired people to say not only that they want to get involved in organizations that specifically address those societal challenges, but in other organizations stepped up and said, this isn't what you do as a mission, but I want to get involved in diversity and inclusion and equity. I want to get involved in that at this organization. So kind of blending multiple interests and passions. And I would say that, yeah, I agree. Board recruitment, not that it's ever easy, but I do think there were some new opportunities in board development and recruiting during the pandemic and now.
Thank you, Andrea. And that was a great segue. Arva and I had talked in preparation with this about the next question, because we really had two pandemics, right? We had the COVID pandemic, but we had the existing pandemic of racial injustice that much of America became more aware of. And so, Arva, do you want to speak a little bit to how the issues of equity and structural racism have impacted your board and the sort of the board staff dynamic?
Yeah, so our board, as I mentioned, is 19 board members. It is a majority African American. And so when we were experienced as a nation this racial awakening, it was personal. And so we definitely felt that at the very core of our board of directors. One of the things that was interesting, our board of directors and our donors, not surprisingly and happily, really cross over. And so when I started, when George Floyd happened, and a lot of different corporations started to issue their statements denouncing structural racism, some of those people who made those pronunciations were also people who were represented on our board of directors. And so my phone started to ring more, and people would call and say, hi, is this Arva Rice? Yes. Are you Black? Yes, I am. Do you lead a Black organization? Yes, I do. Can we do something with the Blacks, right? And so I started to receive more and more of those kind of those calls. What was interesting was to work with some of our existing partners, because they were people that were supportive of our efforts. They were supportive of the work that we were doing with young people, supportive of the work that we're doing with providing employment for adults. But for the first time, they called and said, no, we want to talk to you about our own staff. We want to talk to you about the issues of equity within the organizations that, the corporations that we're leading. What are the ways in which the Urban League can help us to identify diverse talent? How can we look at these issues? And at the time, we had just recently released our State of Black New York report that really looked at how are Black folks faring in contrast to their white counterparts in education, employment, and housing, and healthcare, and criminal justice. And so ended up doing a lot of presentations to our corporate donors, which, like I said, ended up being our board members, and saying, how did we get here? How did we get to this point in place of such inequities? And we're able to say, this is the anniversary of Juneteenth this week, but last year, for a lot of people, they were hearing about Juneteenth for the very first time, right? And so, how did we get from slavery to Martin Luther King? What are all those chapters that aren't in our history books? And opening up those chapters, what does that mean for how we should approach our work in nonprofit organizations as well as in corporate as well? So. COVID, obviously, the racial injustice were epidemics. They were real structural issues that we were dealing with. And they really laid bare the inequities that exist in our systems. But whenever we have that, we also have opportunity. And it is an opportunity for us to dig deeper. It's an opportunity to draw our board members closer through increased communication, letting them know ways in which they can be supportive. And that's how the twin epidemic impacted the New York Urban League.
Thank you for that, Arva. And I'll add, our organization specifically addresses family homelessness, and structural racism is the reason why there is a majority of people experiencing homelessness in families who are Black, and actually the reason why anybody experiences homelessness can be really tied to structural racism. And I think you talked about opportunity. I believe there's an opportunity with our boards, right, talking specifically about boards, to have these conversations where boards may have felt like, yeah, that's important, but it's not central, it's not priority. For an organization like mine, that's an anti-poverty organization, doing that realignment. So I'm going to switch gears here and get a little more kind of into some operational practical elements. And I'm going to turn to Stanley on this, because I think last year was about many things. And one of the things it was definitely about was risk, right?
Right.
Risk in so many ways. So Stanley, do you want to talk about how boards you've worked with have addressed risk issues in the past year in this changed environment?
All right. One of the key things that I've found over the past 17 reviews that I've done is that the board has to have a clear understanding of what systems you have in place to address risk-related issues. So one of the big things that I impress upon is an annual risk management plan where the board is educated on all the systems that are currently in place to address risk issues. But in addition to that, also to identify, well, what were the major risk issues over the past year? All right, and how has the organization addressed it? So like the classic example now, ransomware, all right, and IT issues, that has become a major issue. And what systems do you have in place? The pandemic, the struggle that everybody is dealing with, the stress levels, all right? And again, how do you provide the support to the staff in order to address those issues? So the key ingredient, as far as I'm concerned, is the board has to have a clear understanding. What systems do you have in place to address risk? And number two, what are the major risk issues you're confronting with right now? And what systems have you put in place to address those issues? So this way we reduce the levels of risk. So for instance, you have LAM as part of one of the sponsors. So on my risk management committee, we meet quarterly. LAM spends the time talking about claims review and accidents and whatever. So this way we could pinpoint what programs have a problem and to focus our attention on going to those programs to try to identify what those problems are and coming up with interventions that ultimately correct the problems. And again, that's the key. To me, I can't stress this enough. It's the 3C approach: caring, communication, collaboration. The bottom line is we have to care for our population and our staff, more so than ever as far as our staff is concerned, because our staff have had a lot to deal with. And in addition to that, the communication, knowing that the senior management and the line staff and the board, we're all talking to each other and we're hearing each other. And three, the notion of collaboration, working together to resolve the problem. In other words, it's not your fault, it's my fault. No, the key thing is we got a problem. How can we address the problem and work together? And that is the key components of doing this. And if we can do that, then we could, we could at least minimize the levels of risk. All right, and then go from there.
Thank you, Stan. And before I invite folks, if the panel, if there's anything they want to add to risk before we move on to the next topic, I'm also going to remind people that if you have any questions, a few good ones have come in, and but if anybody has any questions, to feel free to enter those into, you can go into the question box and they get transferred to where I can see them. Anyway, if people have questions, it's a fantastic panel. I encourage you to ask. Terrific. New York, yeah. NYN is always on top of things. So anybody else want to add any thoughts to risk before we move on to our next topic?
I would just add to what Stan was talking about in terms of risk. Years ago, probably about close to 15 years ago, I was doing presentations on risk assessments. And I was told after a series of presentations, Ethan, I don't know if you should get so much into risk. People are not so, it's not such a jazzy topic. Let's talk about something else. As the years progressed, and then I went into financial, all kinds of other things. As the years progressed, the word risk is not as taboo. It's not something that people just shudder from, but they actually embrace, which is exactly what Stanley was saying. And the more an organization embraces risk and understands what the risks are, the better off they'll be. And that doesn't mean to say that they have to resolve the risks. It means that they have to accept the fact that there are risks and then prioritize and say, what are we going to do about them? Because as soon as we say, oh my gosh, if I'm going to make a list of all my risks, we'll never get, this meeting will never end. It's not about resolving all the risks. It's about creating a plan. And when you have a plan of what you want to do and where you want to get to, you'll eventually get there. It's sort of like that saying that says a trip of 1,000 miles begins with the first step.
Right. Right.
If I could add to that as well, that cyber risk and cybersecurity got all kind of sexy and it got the media's attention. There's still a lot of less newfangled, more old-fashioned kind of risk going on, and whether it's check fraud or someone on the last panel and talking about being able to insure certain kinds of risk was talking about the classic where someone impersonates the CEO saying, I need you to wire out $10 million, and someone does it without, just they get caught up in the CEO asked me to do something and it sounded urgent and I'm going to do a really good job at it. And that money is not recovered later. So just all organizations, I think sometimes nonprofits can be easy marks because people think, oh, everyone who works there is going to be really nice and cooperative. And, you know what, question anything that's out of the ordinary, work with your bank to make sure you've got the right products on your accounts to provide certain types of protection, and train your staff not to follow those kinds of instructions. I mean, really don't, and there's check fraud, just make sure you've got the right protections on your accounts. Your accountant knows all about, your CPA knows all about these, your bankers know all about these tools. Even though some of them cost money, it really is worth the investment, because the aggravation of losing $1 million of donors' money to a fraud is a terrible feeling. And I've seen it happen.
All right, and can I just add one very quick point? The disgruntled employee. The bottom line is, when you have an employee that is not doing their job and everybody sees he's not doing their job, and yet no one wants to say anything. And then in the end, when that person is terminated and starts calling up the Justice Center every other time, one time after another, is making false allegations, just creates massive problems.
Mm-hmm. Mm-hmm.
So there's a nice segue from this to our next question, and it's interesting. We've hired a number of people who I only got to meet for the first time last week. They've been with us for a year. We hired them during the pandemic. They work remotely, and it's interesting. One of them, absolutely wonderful, very early on, within like the third day, got the email from me requesting her to buy like 50 iTunes gift cards, and actually went to CVS and almost bought them until she double checked it and realized the CEO does not really ask the new hire to buy 50 iTunes gift cards. So this goes to a question about remote work, right? So Ethan, I'll ask you this, to take the lead on this. How has remote work impacted the board, CEO, executive director relationship and dynamic? What are your thoughts on that?
I'll say it's a great question. That the word dynamic is a good word to use actually. The boards, the CEO, they're used to meeting sometimes quarterly, sometimes monthly. Some of them have subcommittees that meet a bit more often, and that dynamic has changed a lot. And coming with remote, first of all, the participation is a lot better. Typically, it's a lot better, although not everyone's getting those great dinners, but they still have great participation. But there's something more to the dynamic that goes on in that virtual room, and that is that the boards, I think, have learned, and those that haven't done a lot of this should do this, should understand the person that they're talking to. So when the board talks to an executive director or a CEO, they need to understand that that individual is taking a whole lot of information of many, many people that work under them and filtering that into a summarized version, into a short board meeting for then the board to be able to deliberate and make some resolutions. The board should understand that the individual communicating that, this CEO or executive director or others that are charged with that, have not only been working 24/7 on this organization because it's been such a busy year, but they're also coming with above and beyond stress levels. Some people are being, hurt with burnout, frustration. Sometimes the processes need to be checked into again. And the board just has to understand that when they get that information, process what you're being told, understand the background of who's telling this to you. And at times it might be even a good idea to commend and tell the CEO for themselves or for the rest of the staff, I commend you. And I think you should communicate that compliment to all the staff, that the board really applauds everybody for everything they've done. That could go a very long way for the board and for the organization itself. But as a general statement, the importance of a healthy dynamic between the board and the CEO is critical. Now more than ever, the direction and vision of the board needs to be aligned with the direction and vision of management. And it's sort of like that old cliche that we say, we all need to row in the same direction. Because everybody's rowing hard, we're all sweating this out, but we all really need to row in the same direction. And so when the executive director provides that feedback to the board, there has to be some sort of a meeting of the minds of, what are we going to do with this? Where are we going to go? And let's make sure we stick to those, specifically to those guidelines, guardrails. It's important for the board also to hear about the overarching struggles of the staff. And for the executive director or the one charged with that communication to provide, this is what our staff has been going through. Give the board some good examples, some real life examples. Fiscally, large amounts of dollars were put into remote workforces. IT, human resources had to work really hard on many of these situations. And sometimes programs were affected. Sometimes they were affected positively, and sometimes they were affected negatively. For instance, take a soup kitchen. A soup kitchen, many of the soup kitchens I work with, they went through the roof. They were really successful. Others that are more in-person services didn't do as well. Those with mental health did great. And so the board should understand those non-financial metrics in order to help them understand how the financial processes are actually doing. One last item is that it's good for the board to ask the question about, tell the staff, we went through a pandemic. What are our strengths and what are our weaknesses? What did we actually learn? What do you think we could do better? And it's not like someone said earlier, this is not about a blame game. I think it was Stanley. He said, it's not what you did something or I did something. Let's put the organization in the center of the table and let's look at how we responded and kind of openly evaluate ourselves and say, what could we do better if we had to start this all over again? What would we do differently? Modifications that were made in servicing the public, maybe outside the scope of the organization. Some organizations really wanted to help and they just were saying yes to everybody, not realizing may not be within their mission. We all want to help everybody, but it's important just to do it the right way. So I would just encourage that healthy dynamic, that healthy form of communication, which shouldn't be limited to a board meeting, but at least at the board meeting, to really give over the right information so that we can get the right direction from the board.
Thank you, Ethan. And we're getting to a close here. First, I just want to clarify, I do not actually want iTunes gift cards. It seems to be the most common scam my staff gets. It is somebody impersonating me, asking them to buy 50 iTunes gift cards. That's what that previous example is about. I want to give everybody an opportunity to kind of share closing thoughts. I have one last question. I'll ask Andrew to answer it pretty quickly, and then in a couple minutes we'll get to the final lightning round. And this has sort of come up in other ways. How has the board relationship with staff changed or evolved as a result of the pandemic? And obviously, some of us were more, it's more just the CEO engaging or C-level people engaging with the board, and some it's more widespread. But if you can speak to that, Andrea, that would be a great closing question, and then we'll get to the final.
Yeah, thanks. And, I would say that it's mixed because, different organizations had different experiences. And I've been asking friends and clients about this question. In many cases, relationships are stronger than ever due to Zoom and ongoing communication and just really the sense that they were in it together and they came out the other side so far and that they survived. And so there's some stronger relationships. There are cases where senior contractual employees volunteered to take pay cuts to make sure the organization would survive. And so obviously those efforts were extremely appreciated by the boards. But you also have examples where a board decided to impose a pay cut on staff and it went over less well. And, Stanley alluded earlier to disgruntled employees. So they may have inadvertently created some risk. So I would say it's mixed. Most of the stories that I've heard and personally experienced mostly favorable, where those relationships are stronger than ever, and I think will lead to better collaboration and success for the organization going forward.
Thank you, Andrea. And I think that's a great note. And I'll just say, my board has been terrific throughout the entire, all the challenges we've had. And just some of the things that I'm hearing here, right? And one thing I'm hearing is it's sort of like we have an opportunity to reinvent ourselves. We can look at board engagement and say, how do we increase that in a very productive way? We can really look at data and really use data. With this outlier year, and that data will help us better understand and plan for the future. And the other thing I kept hearing too was actually opportunity. There is opportunity in all this adversity. So I'm going to ask each person to just share that beautiful golden nugget of wisdom that people will walk away with. Arva, I'm going to ask you to share first, if you don't mind.
Well, it's tough because I think so many of you all have already shared them. I'm really struck by Ethan's conversation about rowing in the same direction. And I do think that once again, this is an opportunity for us to do that as boards of directors. This is a particularly poignant time in our city, in our country, in our nation. For my mother, it was the moment of Medgar Evers. For me, it was Rodney King. For the young people that we serve, it was Eric Gardner. And for our country and our world right now, it is indeed the death of it was the most recent death of George Floyd. And so I think that it is an opportunity for us to do things differently, to work with board members differently, to challenge systems and to challenge the status quo. And so I look forward to being able to work with my board in order to take this moment and to really, the theme of the Urban League is to empower communities and to change lives.
Amen. If we are not changing the system, we're just perpetuating the system. So thank you for that. Stan, I'll give you the next word, please.
All right, just basically caring, communication, collaboration. I think one good thing that came out of the pandemic is that people are now able to talk to each other more. The virtual connection using the technology has provided an opportunity. And I think the opportunity to basically get that mission out there and help the board understand the relation, what the workers are going through, and creating opportunities for sharing becomes even more important. Again, the storytelling. All right, being able to do that can make such a positive impact.
Yeah, I agree. We saw that throughout the pandemic, throughout the awakening on racial justice, is how much those stories move people, right? Data is important, and data moves some people, but it is stories that's actually going to make the wheels turn. Ethan, I'll give you the next word, and Andrew, you get to get the last word then.
Sure. I feel that the not-for-profit industry in general has been super resilient. I mean, we've been through a lot. The pandemic obviously was a big mountain to climb, but we've been through valleys and mountains and all sorts of difficult storms, whether it be in funding and services and everything else. I really think that we're all resilient. One key takeaway that I would say is that when a situation comes like the pandemic and we don't know what's around the corner, we have a choice to react or we have a choice to respond. A reaction typically is more impulsive. A response is more of a movement. We're going to actually respond. This is the way we're doing things. And I encourage organizations to do a response, not just a reaction. Don't let it be impulsive. And the second thing is we could accept or we could embrace. Sometimes a person disagrees with a decision and they say, okay, I'll accept that. But sometimes we could embrace. Whenever the organization goes in a certain direction, when the board meeting is over, we all have to say to each other, whatever your view was, when we walk out of this door, we're all embracing the decision of the organization because that's what the majority feels is best for the organization. And that's going to trickle down to a healthy future for the organization.
Another terrific message. Thank you, Ethan. All right, Andrea, you will close us out, and then I think Zach is going to reappear and make the next session happen.
Okay, I think people have said amazing things. So ditto. I would say deepen relationships and engage board members, staff, lay leadership. Just deepen those relationships and engage with each other so that when the next crisis comes, the relationships are already there and you're not just reacting the way that Ethan was talking about, the need to be proactive and you know, to know what your resources are and move forward with strength and not on your heels. So deepen those relationships, engage with each other, and you'll be ready.
Thanks, panel. You guys were fantastic.
Thanks for your leadership.
Thank you.
Thank
Claas.
you.
Beautiful.
Yeah, it was great.
Job.
Thank you, Claas.
You made me feel good.
And I'll pile on to the accolades for our wonderful moderator. Thank you so much, Claas. That was really great. You know, so many nonprofits are thinking next steps now that the pandemic appears to be at least coming to an end. We'll see how things work. But there was some real news you can use there, as we say in my line of work. And now, without further ado, we got one more panel that I would like to introduce. Also some more very handy pragmatic advice, I'm sure, but I'm going to leave that to Jennifer Kruger, projects manager at United Methodist Women, who will be moderating a discussion on technology and innovation. Jennifer?
Good afternoon, everyone. I hope your afternoon is going well and you have some energy left to hear us talk about technology and innovation. I've heard all of the panels so far, and I hear a lot of themes that I think you're going to hear in ours around change management, because we're not here just to talk tech, but we're also talking innovation, as well as more prosaic issues like fraud, and as well as the increase in communication and communication tools that we're all using. So as Zach said, I'm Jen Kruger. I'm the projects manager at United Methodist Women. We use a lot of tech to make our projects happen. And as a project manager, that happens to be one of the things that I seem to spend more time on than the projects themselves, is helping people get comfortable and finding the right tools to do their work. And I'm going to allow my panelists to introduce themselves, and Alder Van.
Hello. Hi, I'm Alder Van Daly. I'm the Executive Vice President for Institutional Advancement at Rising Ground.
Did you want to add anything about your use of tech?
Sure. Well, we are one of the largest social service organizations, human services organizations in the city. We are dedicated as an organization to reducing paper and reducing repetitive processes in our workforce and in our workplace. And the pandemic has only moved us forward on some of those thoughts. As a fundraiser, some of those very things were a little frightening. So we had to figure out how to do it.
Thanks, Alderman. Dominic?
Good afternoon. Good afternoon. My name is Dominic Ebanks. I'm president at Acuity Digital. We're a digital marketing firm that provides digital marketing, branding, web development, database automation, and also security. Our clientele, is quite wide, but we do have a strong focus with nonprofits and government public agencies. As a little backdrop, we started our company right back at the tail end of another monumental moment in history, which was the tail end of the financial crisis. And I'd like to say that there are a number of parallels we can make with what happened then and what happened now. One of the things, it was a huge paradigm shift. As a result, technology, particularly open source, came about, and that's how we formed our company, with open source tools and paradigm shift that people thinking of instead of the licensed role and users using free technology that the world has made. So we're really excited about this talk today. So I look forward to getting any question and answer sessions.
Thanks, Dominic. Now I'd like to turn the floor over to Faizan.
Hey everyone, my name is Faizan Yunus. I am a senior manager at Yanche LLP. Yanche has been serving the nonprofit industry for about 30 plus years. We serve primarily as fiscal managers for our clients. We also have an audit department, and we've been growing an implementation department in the technology space over the last year or so.
And I think I have someone else on the line from Yanche, Neuro.
Hello, I'm Nehru Chang, and I'm the founder of Yanche. And as Faizan said, we've been around for over 30 years, working exclusively with nonprofit organizations. We have about 100 staff in New York and 20 in India. So technology is super important, and it's kept as emphasis, and we have been really at the forefront of using technology, which Faizan will talk more about it. But I think we cannot lose sight of what we have to make sure, because we cannot use technology properly unless we really understand and master our operation. We need to know what we are doing, what are the gaps, because if you don't know the gaps, then you cannot go out and look for the right tools, because otherwise, and the two has to work together. So we can't just say, hey, I want technology, but not knowing what you need.
And rounding out our panel is Roberta.
Hi, welcome. My name is Roberta Katz. I'm the founder of Roberta Katz Consulting. I work with nonprofit organizations to help them build and maintain strong finance departments. For example, implementing policies and procedures, streamlining processes, fraud risk mitigation, and implementing internal controls. Before I started my consulting business, I worked for 15 years in senior financial management positions at major nonprofit organizations. And I actually implemented and administered automated systems at several nonprofit organizations. And I actually experienced the challenges of implementing and administering these systems. But I also saw the tremendous benefits that they offer and how they can literally transform a department. And I wanted to join this panel today because I would like to share some of my experiences and insights for those who have implemented or are thinking of implementing automated technology, and join our discussion today.
Thanks, Roberta. And certainly the pandemic has been a transformative experience for all of our organizations in one way or another. I know earlier panels touched on how it changed board relations, how it might have changed how people look at their finances and manage that. So I'd like to open it up perhaps first to Alderman to talk about some of the things that specifically changed around donations and tech versus the analog world.
Well, the first thing that didn't change is that on one day in March, we were accepting gifts through all of the different ways that we do that online, checks that come in the mail, lots of checks come in the mail here. And the next day, there was no one in the office. There was no one to deposit the checks. There was no one to collect the checks. So that made us have to think about what we were doing and how we were doing it. we had to come up with a system for our organization that would allow someone to come into the office and gather those checks. It also made us think more about how do we encourage more of our donors to move to an online giving, which is never going to happen for everyone. There will always be people who will prefer to write a check. My mother-in-law will be sending a check until the last check is sent, because that's what she does. And I'm going to not encourage her not to do that, because that check cashes and it's worthwhile. But there are other people for whom we can suggest monthly giving, online giving, and other sources. So that was a big issue for us. The other issue for us as an organization, there are 5 people in my institutional development department, and 3 of us had to be able to communicate on every donation, including connect with finance. So we had to find both virtual and I would say digital and analog ways of getting the checks from here to the bank and then getting thank you letters to the donors. We did this by being as clever as we could with sending data back and forth to each other, producing letters at home, all of that sort of thing. When we got back from the pandemic, we made some decisions about what we kept. In the past, we'd kept thousands and thousands and thousands of sheets of paper. What we discovered during the pandemic was that we didn't really need all that paper. We could just as easily keep all of that in digital files, and if a board member called or a donor called, pull up a digital version of whatever it was that we had sent them originally. So we went with moving in that direction, and in turn, we're saving money, saving paper, saving trees, and actually saving time, not scanning documents that don't need, to make copies of things. So that's a beginning of how we started, at least on the individual giving and on those areas. There's a whole another story, which I'm sure we'll get about as far as virtual events and that sort of thing is concerned.
Right, true. United Methodist Women experience the same thing. Our donor base, the average age is 71. They write a lot of checks. And that was a huge scramble at the very beginning to just figure out what to do with the mail and how to get it in our accounts so that the members who were moved to give at this moment of crisis were feeling like we were recognizing their gifts. I will say we pushed out a Giving Tuesday Now campaign. I don't know how many people attending this conference participated in Giving Tuesday Now in May. We created a special COVID-19 relief fund for some of our organizations in the United States and around the world, which we have supported in the past. And we ran it as an all digital campaign, specifically encouraging our members and supporters to do it digitally as a way to expedite getting the funds in and then back out again to our supporters. That was certainly one of the larger changes. But I know some of my other panelists, the way their work is handled was relatively similar, because Dominic, I believe your organization has worked hybrid or virtually since its inception. Can you talk a little bit about how you're set up and if anything really changed for you all during the pandemic?
Sure, yeah. So we have our 2 main offices are between Pittsburgh and New York City. And we have staff in both the offices and also satellite in the Metro Atlanta area. One of the things that I have to say is, yeah, as an IT firm, we've embedded in our DNA to be virtual and to collaborate. So for the past 10 years, that's what we have been doing. But we also had a lot of in-person as well. I mean, getting to know a client, and of course, I'm talking from a provider standpoint. We're not a nonprofit. We would be an extension of our nonprofit clients. So we would go into their office and have in-person. So that has definitely changed. Even though we've been digital for quite a while, we're getting to know new clients through this same medium that we have here, right? And it hasn't been easy, but we're getting it done. What we do is work that's very internal, very personal with the organization. We like to say, if we're doing a branding project or even a database system, we're looking to find out where issues are. And it's a lot harder to communicate using sometimes digital mediums as opposed to someone just sitting down, we like to say, taking our clothes off and being naked, right? What's going on in the organization? Where can we help? It's a little bit different doing it by video. However, we've been getting through it, which I think is an interesting takeaway point, is that, as we transition, what is that happy middle ground for everyone? The pendulum swings, right? And it's not going to be all digital, however, I think we'll, with our clients, they have mentioned it, that they have seen some positive cherry picking opportunities. So perhaps they can have a certain percentage of the work that they do digital, and the other part, when they're in person, they'll be able to provide a more effective meeting per se, because a lot of the preliminaries have been done digitally, what have you. So I think a good takeaway is for all the organizations to take a look and say, hey, listen, what benefits can we pull from this? What should remain the same? What should change? I think it's an amazing opportunity of learning. What we like to say is, I think we've all been in what we like to call a social science experiment for the past year and a half, to say the least. And it's very hard to look at it as such because we're in the middle of it and we feel the pain. But if we take a step back, there are a lot of opportunities to learn, like anything that we go through in life. So I think this is an awesome opportunity. And I think this was also touched on even in the panel before ours. So.
Yeah, may I just chime in? Yeah, I just wanted to say that I think the pandemic and the remote working had a pretty significant impact on finance departments at nonprofit organizations, because traditionally finance departments always worked in the office on site. They were able to collaborate, and their finance departments were what I would call paper intensive. So they would have binders of papers and their contracts were in binders, vendor contracts, government contracts. So I think with this pandemic, whether they move back to in-office or a hybrid situation, I think they really are moving not only on implementing automated systems like invoice processing and purchase orders, but also setting up something as simple as a share drive, a secure share drive, where information and documents can be shared internally. And I know this is those who had financial audits last year. This was problematic because the auditors would ask for documents and they were in the office and nobody had access to the office. So there had to be workarounds. So I think the nonprofit's finance function, whether they're going to be fully remote or hybrid or whatever, they are moving to scanning documents, maintaining them, sharing them. Emails back and forth are not official, but if we could set up a directory that's organized and like category, where we can just look at the information without emails back and forth, I think that's really the way to go. And also to prepare for potential other disruptions, which might happen. So I think that's really the impact on finance.
You mind if I chime in as well, Jen? Yeah, so Roberta really hit it on the head here. What we find is a lot of these processes were built over time, and they've been happening the same way, and it's a very, very paper-intensive kind of department. Everything needs to be documented, and we feel like we need it to be in a drawer somewhere so we can pull it out when the auditor says, do you have that? We don't want to scan it over. We want to pull it from a folder and say, here it is. And this whole change to remote really helped us readjust people's thought process around that. People were more privy to say, okay, maybe I don't need it to be in paper. Maybe it's okay if I have it electronic. As you can imagine, paper intensive department, there are checks going out, there are payables coming in, there are things that need to be paid. And all these things are literally paper files that are sitting in a bin somewhere. And effectively, if it's an inbox for accounts payable, someone has to go in and go through this batch of data and reinvent the wheel, constantly looking through it to see what it is, why is it being paid. And in our process, we scan everything after the fact. So even if we were cutting a check in the old world, we would be paying the bill, and then after it's paid, we would be scanning it all into our accounting system. So we are audit ready. So with this whole new process, we're able to expedite and really be more efficient in how we're operating on the accounts payable cycle.
Yeah, I think, not just knowing our operations, but being able to use an opportunity, a crisis is an opportunity to make some of these logical changes we all knew we should have. We all knew it wasn't a good idea that the only copy of something lived in a paper file in someone's office, but we all had it brought home to us. But now that we're returning to the office, I'm wondering if people are thinking about sort of what does it mean to be hybrid, what kind of policies and procedures we might need to create. It's now been a year. We can't say it's an immediate crisis. I know almost everyone on this panel has great ideas, so just start talking.
You know, for us, fortunately, we're in an industry where the service we provided is very conducive to working remote. So we're going to offer our staff the flexibility to just either you continue to work from home or you can go work in the office, because sometimes you want to have that atmosphere of camaraderie getting together, but we're not going to force anything. But the technology that's been put in front of us, we had researched for technology to really, like money.com, that's when we found it. Vic AI, we found it one there. And we changed a bunch of technology that allows us to work more efficiently. And the other part is from the client's point of view, it's accepted more with less reluctance. And then at the end, you know, it's like any change. The first thing is, no, I don't want to do it. But then when they adopt it, what they find is their job is even easier. So when you said that the bill processing system, the approval system, you know, it's just like intuitive. And yeah, and even to some people that are reluctant to adopt technology, it's when they started, and we do quite a bit of hand holding, then say, oh, yes. So it's been really good in that sense.
If I may jump in and take a step back, one of the things that I think are important is corporate culture as we talk about change. You know, there's that adage, you know, the only thing that's constant is change. And one of the, you know, back in my MBA day, you know, my MBA school days, we always talked about this concept of push versus pull, right? We've all been pushed into this environment, whether we like it or not. We're all here, and as opposed to having this event, you know, in person, we're doing it by video. We were pushed into this, just like a lot of these organizations were pushed into using certain types of technology. You know, so I would first talk, you know, to the managers, directors, and executive, you know, executive leadership. You know, look at the organization. You know, where would you push certain elements of technology that would be of value? You know, does it make sense to have the pull approach? Perhaps you see an opportunity and maybe it's a bit more of a long-term effort, but you do see the benefit, you do see the reward, perhaps looking at technology, you know, a new technology in that manner as well. You know, talk about corporate culture. Some of this can also come from the bottom up. So perhaps some of these organizations can have some type of vehicle where staff, the day-to-day staff that are actually doing the activities, perhaps there's some tool that they can put input in on something to change a particular task that they spend a lot of time on and they don't really need to. You know, could it be done anonymously? Could it be done, you know, through some other method? But I think this is a great crossroad that we're at right now for these elements of change.
Yeah, I'd like to add, as a provider, I mean, we work with 25,000 people a year, 10,000 people on a one-to-one basis. We never closed. We didn't have the luxury of saying, oh, I know you live in an IDD and intellectual disability home, but you guys are going to be on your own for the next few months because none of the staff's going to come in. So our organization continued to function, and I would say of the 1,600 employees we have, about 800 of them never stopped working, never stopped going into work. We have places that have staffed 24 hours a day. What we did find, though, was that there were staff in some of our programmatic areas who were coming into the office every day who could have done part of their job from home just as well, because a big portion of their job was to be in other people's homes or connecting with people or making sure people were safe, seeing how they were doing, doing foster care checks or preventative services checks. So there was that area. And so we restructured our offices. We were in the process of rebuilding our offices anyway, but we are looking at only bringing back something like a third of the people into the office who would have, on a full-time basis, that would have been in the office originally. So instead of, there would have been like 300 people in our offices, there'll be like 100 people. Of the others, there's a portion of them who will come in maybe once a week for a one-on-one meeting, or if they have a meeting with a supported person or some families that they're working with. And then there'll be others that might only come in once a month for their one-on-one with their boss or for a staff meeting or something of that nature. So we've certainly rethought the processes for, let's say, the half of the people who don't have to be with people all the time. But that brought up a question of equity and us really having to think through looking at it from an equity lens, what was fair and what wasn't fair. What did we provide? What didn't we provide? And we really had to think hard about how we track time and how we track achievement in order to make sure that we were being fair to all of our employees.
You know, talk about the moving back to the office and trying to kind of maximize the usage and to still, even though now we're reopening again, we still want to give the flexibility of having the spacing and all of that. So we just adopted a software that allows people to book their seats, because our seats are not, you know, it's like the work is interchangeable. So they go online where the software allows them to book that. And then that system, if you don't show up in half an hour, then it's available for somebody else. So that allows to protect them and also have the flexibility and not having to coordinate with the staff doing that to schedule the space. So technology is really, a lot is around, and then I think it just keeps coming as the needs arise.
Yeah, I just wanted to chime in that as the work environment changes, remote to office or hybrid, it's very important to have documented policies, because I think you talked about equity across the organization. Somebody's working from home and they're allowed to work from home, but they have to pay for their Wi-Fi. What will be reimbursed? If their computer breaks or they need another webcam or a printer, what will they get? What will they be provided with? Also in terms of the security of the data of your computer when you're working from home. You know, if rules change, people need to know what the rules are, and it needs to be enforced throughout the organization. And in terms of managing our technology and our computer systems, you know, I'm very big on having written policies and procedures, but in terms of managing computer systems, you need to have written policies in terms of computer system access and backup. Who's in charge of assigning rights to the computer systems, and when is the system backed up? Who's responsible for backing it up? Is there a disaster recovery plan? And what is that? And then if technology factors into your day-to-day procedures, you need to have those procedures written in a policies and procedures manual. So it applies not only for finance, but it really applies for departments throughout the organization.
You know, I think I just want to add that with working remote, all our staff now is using their cell phone. So what we did is readjusting our telephone system where they will be using their cell phone, but it's not coming out of their bill. It's go through our overall system. So I don't know how it works exactly, but the effect is that it's not going to impact theirs. And then they cannot be, you know, sometimes clients call them on their personal cell phone all the time. This way, they can't call them on their cell phone. So it just kind of makes them more, give them more flexibility in terms of how their cell phone is being used by the firm.
If I could just talk about one point that, as we were talking, it kind of rung in my head, is the digital divide. So we're all talking about these great technologies, and you know, as a firm, we're building solutions for our clients, but we've always stood by this one point: people come first, technology comes second. You know, these technologies are a mechanism or a widget, and one of the digital divides that come to mind, most importantly to me, because I have family that's going through it right now, is age. What we're seeing is a loss of organizational knowledge as we're walking through the door, because what's happening is, and you know, again, we were forced into this. Some folks said, you know what, I'm doing early retirement. What am I doing on a Zoom? You know, what am I doing on some other web platform? I have no time for that. And internally, our clients know that they're losing a very important person, and the reason why is because this person felt that they shouldn't have to go through this type of engagement. But I think if we look back and kind of peel it a little bit more, I would question the organization and the leadership. You know, were these folks trained on using these technologies? You know, all of a sudden now, for example, we're all going to some type of Google platform, right? And that's where the documents are, and we're sharing documents. But some of these, workers, they've never used this before, and no one's ever trained them. And as a result, they may leave, or, perhaps some will stay and learn. But I know people within my family, it's a really big issue. So I think a walk away from this, again, to leadership, and I know the last panel talked about, how much money is put into training. So well understood. Perhaps we can look at how that money is being spent, but maybe some low-hanging fruit training sessions on just operations, like a default plan, like that we're living now in the past year and a half. If this happens, perhaps we'll use this system. Let's do some basic training on Google, basic training on video, or whatever the next issue may be. Just wanted to share that thought.
That's a very good point. And I just want to jump in here because, as I mentioned in my introduction, I actually implemented systems at nonprofit organizations, and I was responsible for the training. And as you mentioned, technology is just a tool. It's really the people. The people have to know how to use the tools. And what I would say is I've categorized the end users, people who are using the systems, into 3 categories. One of them is those who are very tech savvy, computer savvy. They'll take the software and they'll run with it. The second group is those who really don't feel comfortable with computers. And I had those. It was a small subset of people, but they really didn't feel comfortable. So what I did was I set up sessions with them, and we did screen shares. And every time they had to perform their jobs, we would do screen shares, and I would walk them through how they do their job on the software. And it took a couple of sessions until they finally felt comfortable. But the third group, which is, we're talking about change management, the third group, which I think is probably the largest group, is those who are resistant to change. I heard over and over and over again, why do we have to do this? We never had to do this before. So I think they feel that way because they don't know the benefit of the technology, they don't understand how to use it, and they don't feel comfortable with it. So what I did in that case, because the systems that we implemented were usually customized, because nonprofits have complicated cost allocations, we had to have the software customized. So what I did, and I found that the training materials from the software vendors were usually very standard, and it didn't really address how we processed our data. So what I did was I created my own manual, a user guide manual that was a step-by-step process, and it includes screenshots of the software. And in addition to that, myself and my team, we made our own video, and we each took different roles. I was the role of the approver, they were the role of the person submitting, and we created a video. It took time, and we distributed it to the entire organization. And we actually had them sign an acknowledgement that they watched the video. And at the end of the day, when we rolled out that system, we had almost no questions on the functionalities of the system. And then those people who complained about change came to me and really thanked me for spearheading the implementation of the automation, because it helped them do their job. They had the tools now. For example, a program manager is responsible for their budgets. But they would get the data without automated technique. The data would go from here, there, and everywhere. But when they had the automated system, they had all the data right there in one place, and it empowered them and enabled them to do their jobs better. So I think training is really crucial, and no one size fits all. And you're going to have, if you have 1,000 employees, you'll have a lot of people with different backgrounds, and you really need to work hard because it needs to be, people who are implementing the data and are responsible for generating accurate, financial data really need to have that training. So, that would be my experience.
If I can chime in, my experience during the pandemic especially was quite a bit different. If it was 2018 and I said, hey guys, let's implement a new AP system, the clients would usually say no. Why would I change? The process works. I know how it works. I don't want to learn something new. But COVID-19 was a really strong change management tool. It was a big, big unfreeze moment. And folks said, hey, I'm already learning Zoom. I have to learn it. I'm learning Teams. I need to do all of these things that I never had to do before. What's one more thing, right? And when at that point, it wasn't a matter of, this is a decision. I don't want to learn it. It was a matter of, I have to learn it. I have to be a part of this process. And people really bought into it. People were willing to learn new systems. And I think there is another unfreeze moment coming as we go back to the office. Normalcy hasn't hit yet. And that unchanged moment is going to come once again as we kind of gear up for this new world. And we really need to focus on taking the best practices that we learned during the pandemic and applying them back to normalcy, and then also developing better practices and how we work in this new hybrid model.
Yeah, I think the whole notion of what does it mean to be hybrid, everything from, having something like Neuro described as a little app to sign up for a desk. I know my office is going to that. You make a reservation and you can coordinate with your team members or your project team or whatever it is, so that if you want to all be there at the same time, you can. To really understanding what changed that was a great idea, like not making paper copies of everything. Even to Roberta's suggestions about, making sure your training is customized for your organization. Adding that screenshots and a video and what we call ride alongsides. I literally, someone who's well-trained will just sit on a Teams call and be there in case the person executing it for the first few times has a question. Alderman, have you all done any training or changes to how things are happening in your development group that you had to readjust during this COVID time?
Well, we adjust a lot of things as far as the, especially in the individual giving area, we would be, we did full newsletters and direct mail and everything not being here, from home with using shared drives and using all that sort of stuff. And luckily our data is hosted. So we were able to get to it at any time without having to think about it. And run reports for board meetings and for boards and all those sort of things. The biggest change has been in our working with finance, as I said earlier, and how we manage that relationship and getting data to them and getting checks to them and that sort of thing. One thing I want to bring up, which is a little bit off, but I think it's important, with all of the talk about technology and all of the things that we're doing, especially in my world and fundraising, I have used more of these than I were before, which is just a blank card that I then write a personal note on. It goes in an envelope and you put this thing called a stamp on it. And then you drop it in, or you give it to someone and they put it in a blue box and it shows up at someone's home. Because what we discovered was, as we were asking people to do more and more technology and connecting with us in these virtual ways, it became more important for us to make personal relationships with them. Especially since we were in this COVID period getting donors for whom we didn't know quite why they were making a gift or what their relationship was with us. They were acquisition donors, and they were sometimes giving rather large gifts for us. And so we wanted to figure out how to do that. So my whole team, we sat down and wrote notes to the majority of our donors over a certain level, just letting them know we were okay. We also have a lot of donors, and a lot of nonprofits are this way. And I don't know how you guys are, Jen, but we don't have their email addresses. All we have are their mailing addresses. And many of them either of a certain age, but they don't have an email address, they don't want any more email, whatever. So, finding ways to connect with them through physical means became very important if we were going to meet those financial goals that we've set out.
Yeah, hybridizing the way we communicate. So we have all these great new virtual tools, but also going back to the note, I'm getting ready to run a postcard campaign. Although it has a virtual aspect, it's going to have a QR code on it that they can scan with their phone that will take them to an online donation form should they choose. This is revolutionary for our organization. Dominic's laughing because I bet many of his clients have been doing these kinds of things for years. But for an organization that has an older donor base, as well as an older staff base, I think the Urban League said they were celebrating 100 plus. We're at 152 years at United Methodist Women.
190.
Whoa, you beat us. Nice. Sometimes I feel like we're all relying on files left over from 100 years ago. So we've talked about a whole bunch of different things. One I haven't heard much about is virtual events. So Alderman, I don't know, did you run any virtual fundraising events?
Yes, we did a virtual gala last year. It was a huge success for us, partially because the cost was so much less than it would be to do it at an event space. We were able to actually make up for what we weren't, the few donations we weren't able to bring in. The interesting things about the virtual gala was that many of our board members and our table buyers were pretty excited about being able to invite their friend in Albuquerque or invite their friend out of town to the gala to see the organization they had always heard about, but we're never going to fly in town, on the date we have picked in order to do the gala. What we did do was we added a real component, which was that every person who was coming to the gala, I think there were 400 of them, 450 of them, got a goodie box. So they got a box, and in the box was a gift, how to get on to the session so they could look at it. We used a special platform. It wasn't just a Zoom. It was a special platform, how to get into the platform. And then it also had a way for them to make the bid on service auction items. It also had cocktail mix, arugula, and a black and white cookie. All the things that sort of say, welcome to New York, and we're thrilled to have you. But we had those shipped out, and we did those. So they arrived the week. So the gala was on Tuesday. They started arriving on Friday, but that was the sort of thing to tie people back to the gala so that they'd actually show up. This year, we are doing, in our 190th anniversary, we're continuing to do virtual events. We're working with one of our founding partners, actually, from 190 years ago, Trinity Church Wall Street, to do a series of 4 discussions about social services and the history of social service, race and social services, gender and social services, and philanthropy and social services. And the first 3 of those for sure will be virtual. The first one has already happened. The next one's coming up next week, June 24th. And you can find information on our website at Rising Ground. But they've been very successful in bringing people in who would not have known about the organization otherwise. We will not be doing another virtual gala. We feel like that train has left the station. So we put our gala off until March of 2022. We will be doing a small in-person event in September to test the waters. But we felt like there's only so much virtual you can do, although we're anticipating that the March 22 event will have a hybrid element to it. That we will run it somehow so that people can invite their own neighbor from their neighborhood in Wisconsin or wherever they were from, or somebody who isn't old enough who is too old to come, or isn't quite comfortable coming out, or whatever those things might be. So I think that hybrid in some form is here to stay.
Yeah. Right.
Yeah.
if I could add on to that in terms of tools that we've seen, you know, even touching on, you know, this past topic of training and policies and such, you know, we see a number of firms who weren't very digital and they have become digital. They've entered the scene using, you know, secured intranet platforms to share documents that they have not before. You know, of course, you want to be cognizant of hacks and things of that nature. So there are a lot of tools that can be layered to protect certain sensitive information. We've seen organizations use what they call a digital knowledge base. That's a platform you're able to have a number of documents and tools, and on the back end you can track who's downloading what and so forth. You know, each organization has a different application, you know, benefit and pros and cons and such with that. We talked about a little bit earlier, putting training videos online, right? So a lot of us, you know, use PDFs and so forth as our manual to complement that, or depending on the situation, replace that to be actual training videos, right? So it's the sound and the visual. It's all about the, you know, how effective it is to the folk that are viewing it. And also, what we noticed an uptick in is what they call LMS systems, learning management systems. Mm-hmm. So, you know, a lot of universities are known for this, and now we know that high school and down, and now corporations and so forth have been using this online platform where you're able to share information. You can take your own course, if you will. You can have, you know, it can be 100% digital. It can be a hybrid, perhaps certain, you know, especially as we're transitioning back into the office, perhaps certain information can be in person. Other parts can be on this e-learning platform or LMS platform. You can go at your own pace. You know, some folks, you know, prefer to do things like this at night, you know, looking at a training session at night, taking their time, pause, come back at it 2 days later. Loads of flexibility in that. So these are some of the things that have been talked about with even some of our small nonprofit organizations. And, you know, those who are listening, some of the tools that we're talking about doesn't necessarily mean that you have a staff of 500. We know of organizations, staff of 5 and 10 that are using some of these tools, especially when they have a member base, for an example. And of course, you have your board, right? So a lot of these tools can be leveraged in many different ways.
So I just wanted to bring up a point before we end the session, is that when we implement these automated systems, it's very important to be sure that there are proper internal controls within the system. For example, in the previous panel, they talked about credit cards. They've distributed a lot of credit cards to a lot of their employees during this pandemic, but somebody has to be there to make sure that the credit card spending is valid and the proper documentation is submitted. And this may sound interesting, but when I implemented a system and I wanted to set up approvals, like who's approving for who, for whom, I didn't get the same answer from 2 people, like who's your supervisor? They had a supervisor for HR, they had a supervisor for expenses. So what I decided to do is I said, I'm going to use our organization chart. And whoever is your supervisor on the organization chart, that's your supervisor in the automated system. And when you set up the system, there is a routing, and you need to route these transactions to the approver. So I think thinking about having, and I know these systems are built with the abilities for these internal controls, but they need to be implemented correctly in order to have an efficient and effective system that generates accurate and reliable financial data that's for the finance department.
Yeah, I think that's also relevant for any system you implement during this process or afterwards. It's really knowing your process as it is today and mapping technology around that process. How do we fit in our current business requirements around what we're going to implement? So for us, we implemented Monday.com for internal use cases as well as external. And all the triggers that we had in the real world, we built them into Monday. So if I had needed a 2-step review process for a grant, I would go ahead and add the client to the board, and we would have an internal review with the client, and it's all visibility is there. So I know when the client saw it, I know when my team saw it, I know if there are any notes related to it. So it really felt like we were still in the office, and we were able to minimize emails back and forth and calls and texts. It all happened on one platform, and everybody had a pulse on what was going on with each and every transaction.
And you know, it's all about communication, especially now. So it's just like, what are the tools available to us to communicate better? You know, that I'm not a technology person. I know what I want out of technology, but I'm very used to paper and pencil. So my assistant finally, because I was doing that all the time and setting, so this is what she gave me, and then she taught me how to use it. It's called Remarkable. I can write things down. It can be converted to script, and then I can email it to her. So a lot of things I do, I don't use paper as much anymore. So when I have a meeting, I just jot my notes on the meeting and file whatever I want. It's really kind of incredible. And being somebody who likes technology but is not good at it, so our team, we use Quick Assist. When I need something, they jump there on Quick Assist, hey, do this, do this. So I'm a slow learner, but they force me to learn because I don't have a choice. So communication and how to communicate effectively is important because you need technology. You cannot avoid it, whether you like it or not.
In fact, that's the one question that I see that's already in the Q&A is, could we say the names of some of these systems that we're talking about for reserving desks or the cell phone system or any of these? We're not endorsing these. They're not going to answer. This is I'm related to a lawyer statement. We're not endorsing these. They're not going to solve all your problems. They're just ideas. They're places to go look. I think Faison probably has the names of the hoteling system that you're using.
Yeah, Heidi, we're using SmartWay 2 as our desk management system for our office, and we're an Office 365 Enterprise, and we're using an extension of Microsoft Teams to get our team cell phone numbers associated with their Teams accounts.
Cool. I know my office is getting ready to use a piece of software that started out as carpooling software. It's called Bees Co-op. It looks like Scoop, which isn't what it is. Although Cheng uses Monday.com, we use Basecamp to help schedule projects and meetings and keep all of the information about something in one place so that everybody can get access to it on the cloud. Are there other tools that people would like to mention by name?
Well, I know in terms of invoice processing, because one of the issues was, when people weren't in the office and vendors were sending invoices, and there are several products out there, use Chrome River, Concur, and they have a component which not everybody uses, is where the vendors will actually send the invoices to like a PO box at the vendor. So all those invoices go to them. You don't have to worry about receiving them in the office and missing a day of mail. And they will actually input the invoices in the system. They can't code them and process them, but they will input them in the system, set them up so that when you come in, you just see which invoices came from the vendor today that need to be processed. So that's a component of these invoice processing systems that I don't think everybody uses, but I think it's worthwhile checking into to see if it's beneficial for your organization.
I'm also going to throw out just at the end, if you may already have software that you use or something that you use for your CRM or your donor database management, if you're in my world, and you may not be using all the pieces of it. You may be paying just to put gifts in. This was the time to look at everything it does. You're paying for it anyway.
Yes.
You're probably paying customer support. Get them on the phone, make them show you how to use it. That's their job. So, as you look at other things, make sure you're using fully what you already have. Don't just assume that whatever is shiny is going to be better than what you already have on your desk. It may not be true.
That's a really great point. And what's come out of this for us is this really major shift to data governance. We have to govern data. We are really focused on making sure that the new tools we're implementing are giving us the things we want to look at, the data points that we want to see. And then we take those data points and we make sure that our old data structures kind of line up with that. So the organization is going to be more data driven as we come out of this. The approaches are all shifting towards really making data driven approaches.
And with the thing that we implemented, it's just we send report almost at a push of a button. And even the staff doing the work at a push of a button, they see things that they should be seeing. And then they were surprised, whoa, I didn't know we could get that. And now you don't have to explain. They self review themselves on their performance. So I think with having those tools, like Replicon, what we did is when we adopted that software, we had to revamp how we code our service. We had to restudy what is our service code, and we changed the coding, because unless you integrate all of that, then you get garbage out of it and it's not useful. So I think that's why you need to know what your systems are, what you're trying to achieve, and then look for the technology. You muted them.
Oh, I'm muted. Oh, I'm back. If I can underscore, Aldevan and Nero, what you guys mentioned, I think is a key point that folks should walk away with is look at the systems that you have in place before getting that new shiny item. And everyone says, oh, they mentioned a big name. And of course it'll do those things, but you only need the 20% of the functionality, or inverse, whatever the case may be. So, I know a little bit earlier we talked about even fundraising. We speak to some of the small nonprofits out there, and some of them are still using, let's say a fundamental system for basic fundraising or donations, PayPal, things of that nature. There are other tools you can upgrade that doesn't have to be a full CRM, especially if your budget doesn't allow it. We recommend it, but circumstances are circumstances. There are open source donation platforms and some proprietary donation-based platforms that operate kind of like a quasi CRM, right? It doesn't have the full functionality, but it does have reporting of donors and other interactions that you may have had with them. Some of them are totally free. You just have to pay for the implementation of it. So that's something to consider if you're not budget ready for a full proper CRM. That's something to look at, speak with your technology provider about. Other things to think about are, lead generation forms. Look at your operations. Do folks need to come at your front door, at your doorstep to get that initial engagement? Perhaps there can be some lead generation forms in there, pulls in data, builds a profile on that person, and then you can start engagement from there. On the back end, your staff can take notes about each interaction. There are a number of tools out there that can be used. We also have noticed a big trend with organizations that have a lot of information to share. They're leaning towards more online database directories. You can have it built within your website or resource centers. You can have it built within your website. You can have it hosted on a third-party platform. Some are free depending on the volume and things of that nature. But if you're a member organization, for an example, and you're always giving out information to your stakeholders, that can be an option as well. Again, that balance of digital and in person or whatever interaction you have is key and important. We talked about even online communities is another thing that we've noticed, and I kind of touched on it a little bit earlier. But just to underscore, give your stakeholders that level of engagement, even though they're not at the office or at your site. Logging in, perhaps they can communicate with one another depending on what your organization does. Perhaps they can communicate directly to staff. Forums, having a discussion like this within an organization's website is definitely possible as well. So, these are just a few things that can be, one can walk away with. I wouldn't be able to mention too many names because, conflict and so forth, but there are loads of options out there, open source and proprietary system.
I would just have one final thought in terms of generating data. I know there's increasing demand from donors for data because we're all chasing after the same dollars, as well as internally, organizations are making critical decisions, program profitability, should they cut programs, and they need the data, they need the reports. But in order to get accurate and timely data, you must have processes in place where you're insured. Let's say you're doing a monthly financial, that all the revenue for the month has been input, have all the expenses been input. So you need to be sure that everybody is inputting the data on, and you have a by due date, because we have to produce financials the next week for the board. You have, if you don't have all your data in, you can, the technology will print reports regardless, but you have to have that structure in place. And I call it a financial closing process, which I've implemented at many nonprofits. And it really is crucial in order to get that accurate and timely data.
Yeah, data hygiene is hugely important. And I see Zach's smiling face near ours, which indicates we are out of time. We had other topics we could have talked about, other ways to link to previous panels, but hopefully we'll all get a chance to see each other and discuss these things at future meetings, whether they are on Zoom or not. Over to you, Zach.
So sorry to end the party. I thought things were getting especially interesting. It went from an expert panel to what seemed at times something like an intervention for people. Use all your software. It's already there. Really look what's in front of you. Thank you so much, Jen, for moderating that. I think that was a really great discussion. Really made issues of data hygiene come alive. In lieu of audience applause, of course, I'll give a little clap, but I think Jen hinted at something that we're all really hoping that next year's OpCon will be back in person, but we'll see. After a year like we've all had, who can predict anything anymore, right? Except let's keep the conversation going. We got a couple great events actually coming up. Join us on Wednesday, June 23rd at 5 p.m. as we honor and celebrate the 2021 Pride Power 100 list. Lots of nonprofit folks there. Registration is free and can be found on the City and State NY website. That's city and spelled out, state like New York.com. And in the chat right below. And then join us next Thursday, June 24th, for a webinar on economic inclusion, how industrial development agencies, those IDAs we hear about so much, can develop more equitable and sustainable communities, sponsored by Babylon Industrial Development Agency. Is registration free? Of course it is. It can be found on the City and State NY website. It's city and spelled out, state like New York, and then ny like newyork.com, and in the chat. And then finally, on July 14th at 5 p.m., we celebrate the Albany 40 under 40. Again, plenty of nonprofit folks on that one. Registration is free and can be found on the City and State NY website and in the chat. And of course, I would be remiss without thanking our wonderful panelists one last time, as well as our wonderful sponsors, which include Akuta Digital, BHI, the Bone Adio Group, Buckbinder, Tunic and Company, LLP, Citrin Cooperman, Lamb Insurance Services, Inchung, LLP, Roberta, Katz Consulting, Your Part-Time Controller, LLC, and REWCPA. I'm Zach Williams, City and State reporter and former staff reporter at NYN Media. Thank you so much. Keep an eye out for that email that will not only tell who won the raffle today, it will also give a follow up with a survey soliciting all of your great advice on how we can make these events go better in the future. Again, Zach Williams, former reporter at NYN Media and City and State, senior state politics reporter. Hope to see you next time.